Today's video is sponsored by 8cap, and did you know you can actually get a free copy of Edge Finder with the help of 8cap? The way this works, basically, if you create an account under our referral link, which I'll have linked in the description down below this video, you can actually get a free copy because they purchase it on your behalf. Now, how this works is basically if you follow the link that you'll see on the screen right now, basically scroll down to where you can see all of the different offers that we have, where if you deposit a certain amount of money into a new 8cap account, they will effectively buy our products on your behalf so that they're free to you, you get them free, and you also start trading with 8cap. Please also make sure to do your own due diligence on 8cap to make sure that is a brokerage that meets your own risk criteria. All the information, like I said, can be found in the description down below about this specific sign-up offer. Thanks to 8cap for sponsoring today's content. Now back to the video.
Good morning, everybody. Welcome back. Happy, man, what's today? Today's Thursday. Happy Thursday to you. Hope you're all doing well. I guess we probably did get unemployment claims this morning. Yes, unemployment claims came in a little bit better than expected here this morning. Let's just see. Hold on, I gotta reload my drawing tool here. I don't know why, but this tool that I have, you have to like completely restart it every once in a while. Otherwise, it doesn't let you draw anything. Let's see. What is the latest in terms of markets? Well, they are down here today. Unemployment claims came in just slightly better than anticipated. Nothing crazy on the economic data front, although retail sales month over month also came in line with expectations. One thing worth noting, core retail sales a little bit softer. However, the revisions from the previous number were both higher. So retail sales and unemployment claims came in this morning, arguably kind of slightly better or in line with expectations. Nothing shocking or crazy on that side of things. However, latest volatility, of course, a big piece of it is AI related. There's some worries going on about AI spending and futures of spending. There's some trickiness with the AI trade. There's so much kind of hype and euphoria about the spending and the excitement around, these data centers and the Chat GPTs and Geminis. Like, these are incredible softwares. The problem is, though, like in the internet bubble, for example, people, they get really excited about new technologies and they price them accordingly. So one thing that took me a long time to really understand in markets is that it's one thing to decide whether or not a business is a good one or not. I don't think anyone is really disputing whether or not like Apple products, like if they're a good business or not. Clearly, a huge chunk of the world loves what they do. Their products are worldwide. The question, though, is whether or not Apple shares reflect that properly or not. So what I mean by this is it's not enough to say the Nasdaq should go up because AI is exciting. You have to say the Nasdaq should go up because market sentiment thinks it's exciting, but what they're not aware of is that it actually is going to be more exciting than what people are thinking because XYZ. Or if you think the market's going to pull back, you're going to say, well, everyone thinks it's going to be exciting, but there's going to be a disappointment for X, Y, and Z reasons. You see what I'm saying? What makes markets move is not whether or not something is good. The market's very smart. It knows AI has a ton of potential. It knows, market participants know that earnings have been phenomenal for companies for quite some time now. If you want to talk about getting the stock market to move nominally higher, like significantly higher, it's not a question of are corporate earnings strong? It's, are they going to continue to be strong and stronger than what people think? Does that make sense? It took me a long time to understand that, but it is very important for understanding the way markets move. It's all about expectations versus realities, right? Expectations are here. Here, for example, expectations for gold have become terrible. We can see this because this is what we specialize in on this, kind of channel is we look at macro fundamentals to sort of support the claim, but we also look at crowd sentiment, which is very, very important, which we have not looked at today. So we've got a fresh slate. We got a lot of work to do. I invite you, if you enjoy this content, to subscribe, to hit the thumbs up button. And hey, here's a little kind of exciting PSA. We are going to be expanding the live stream to be longer. So if you are some of my friends from Europe, from Africa, from Asia, over here on the US, right now it is 8:30 a.m. We usually start the stream around this time. Our goal, I think, is to start it an hour plus, an hour and 30, hour and 45 minutes sooner, which means now it's not going to be me. It's going to be one of our other, lead anchors, but the show will run a lot longer, which will be great for my friends who are like, looking for market analysis in the London session. We're going to extend the show in that direction. So I'm really excited about it. I'm excited to wake up, roll out of bed, and see that we're already streaming. Like, that's cool to me. Like, that's awesome, because the guys, that are obviously coming on here are, we're a crew together, right? We all kind of trade in a similar fashion. We're hunting the same kinds of things. We all use Edgefinder, so it's exciting. Anyways, for live stream fans of the show, that is coming. So we're working on it. I think we're going to try and get that started next week. So again, if you're someone, I don't know, if you're in the UK or something and you want to tune into the A1 Trading stream earlier on, the show will be live sooner, which is going to be cool. Anyways, let's take a look at some sentiment stuff, because I want to start with gold here today. Look at that. So gold put call ratio was unbelievable yesterday, has dialed in significantly today. And I think that it is worth mentioning that obviously this was CPI day and PPI day was yesterday. So sentiment may have gotten, or puts may have gotten so extreme, partially because a lot of people were hedging, but that doesn't totally offset the sentiment signal that gave us, right? In fact, yesterday we talked at length about how gold, essentially, crowd sentiment had gotten really bearish on gold ahead of CPI, and then popped on CPI, right, initially, and then has been kind of falling back down. Sentiment has normalized a little bit here. Let's also, again, put call ratio is great, but we can also take a look at our volume flow to get a nominal idea of what this looks like. I'm very curious about this. And I'm also thrilled. We've had a lot of people who are like pumped about the new options data, which, okay, this is worth looking at, which I'm excited to share more with you guys, because it is a really powerful set of tools. Yeah, so Rev in the chat says, Iran tells Yemen's Houthis to close the Bab el Mandeb gateway to Red Sea if the U.S. hits power network. Yeah, things are not relaxing over there, at least so far. Hard to say how that will all play out. So many times it gets like loudest right before a ceasefire gets announced, right? So it's very, very hard to predict that. But $80 oil, we'll take a look at oil in just a second. So net options volume flow for gold. What we saw here in the last few days is a significant surge in put demand. What this does is it subtracts the call volume of calls minus volume of puts. And I want to put this somewhere on here. I need to, like, this calculation, I need to think of like the naming of this page. In fact, bear with me. I'm going to write that down because I don't want to forget to do that. Volume calls minus volume puts. Okay. I have it in my notes. Guys, you should see. Look at this. I go through one of these like a couple times a year. And all it is like daily tasks, daily things to get through, Edgefinder changes, website fixes, videos to film. I just, and you know what I do? And I would encourage, if you like what you do, if you're like studying trading and filling out notebooks, if you're like me, if you like to do it physically, keep them, man. Like, I have a wall of them, and it's just like so nostalgic to go back and read through. Like 4 years ago, I was figuring out how we're going to calculate COT calculations within Edgefinder, and I can like read through that, and it's so nostalgic for me. So keep your notebooks. It's a really cool. I used to do everything digitally, but I moved back to paper for that reason alone. The nostalgia factor is so valuable. Plus, I like physically writing. Anyways, check this out. Net options volume flow was significantly bearish in the last few days. And to be fair, crowd sentiment is not always necessarily wrong. This is why we don't overvalue one indicator ever, right? Edgefinder is a tool that screens a bunch of stuff, because the reason we scan a bunch of stuff and not one thing, if it was as easy as saying, I'm just going to fade this all the time, like, oh, everyone's bearish, okay, now I buy, right? It's not that easy. Sometimes there are reasons that crowd sentiment is overwhelmingly swinging back one way. And sometimes it's not a perfect timing indicator either. We want to take these things as context clues, build a report, and then trade based on it, right? That's kind of the attempt that I am trying to do here with Edgefinder. You have all these different features, etc., that we're trying to incorporate into the analysis and then get an overall score. So that's the thought process. Let me just get rid of this really quick. Let me get this off the screen. So look at gold, man. Gold is tanking here this morning. Nasdaq down 1.15, S&P down 0.4. Yeah, gold is really struggling here. Yesterday in my video, I was talking about I'm looking for this breakout and just not seeing anything. Like every time we get something going here on gold, it gets smacked down. And I think, you know, people are gonna hate me for this, because I've been supposedly flip-flopping in every one of my videos. I've not taken any positions on gold in terms of like a short-term active trade. Yesterday, I specified I'm looking for a breakout here, and it just has not materialized. And I'm very glad that I'm just like sitting on the sidelines waiting here. Mixed signals back and forth, you know, headlines, etc., has been a mess to try and trade through. So I'm really feeling thankful that my checks and balances system, which, you know, Edgefinder is that attempt, is keeping me sidelined. Like if nothing else, like the last 1-2 weeks where I've taken no positions on gold, and to be completely honest, I've been kind of like sitting here, you know, twiddling my thumbs, waiting for an opportunity, has been the best play I could have made, because this is like incredibly frustrating to try and trade this, right? If you're, oh, it's going lower, I'm going to short, or oh, it's breaking out, I'm going to go long, right? This has been a chop fest. And I don't know which way we resolve. I do have a tendency to think the more likely scenario is a eventual breakout here, but clearly we're not seeing price action marry up with that idea yet. I think at some point we will get some sort of meaningful breakout. And as long as my macro stuff still lines up for bullish setups, then I'll look for a long trade. But I can't trade in here with no follow through from the bulls. No follow through from the bears either, to be fair, because we've respected the longer term trend. But I still think your decision points are these levels. And I actually want to take a look with you guys at the options data to confirm what levels we should be watching. Yeah, let's look at this. Makes no sense. Metals get screwed while 30 to 50%, while stocks keep making higher highs. Well, let's remember, gold, you could have said that last year the other way. Metals were doing phenomenal while stocks did well, but gold like massively outperformed. It had a ginormous up period, right? So it's just giving back. It's just pulling back. I know it doesn't feel like that in the here and now. You're like, oh my gosh, it's crashing every day. But understand, if you're someone with a longer term kind of horizon, gold has given back a third, or maybe, well, a little bit more than a third of its gains in the run up here, which is still kind of in the realm of healthy and normal. It just doesn't feel like that if you're watching, you know, the 4 hour and the 1 hour. But yeah, no, I get it. I get it. It's like, what's going on here? There is a deciding factor here. And I understand your frustration, because I too would have liked to see stocks pull back more here. There's one word that separates this story significantly, because this is not the word, right? Rates. You might think, well, hey, rates are moving higher. Yields are moving higher. That's crushing the gold longs. Gold bulls have been like totally frustrated this year because of higher interest rates, higher inflation, etc. But Nick, that negatively impacts stocks. Why aren't stocks moving lower? This is so annoying. I understand your frustration. I'm in no way, trying to disrespect. What I'm saying though, there's a key word here. Does anybody know what the word I'm going to say is? Why are stocks holding up while meanwhile precious metals are just getting waxed this year? Why is that? And I'll give you a hint. It's not just gold, bonds, it's silver, it's gold, it's lots of other assets are not doing that well. But why are stocks holding up so well? What's the reason? Someone said not real. Okay. Oh, real rates. Oh, you meant real rates are still negative. Okay, that's fair. Here's the word. The word I'm thinking of, earnings. And this is the part that people miss when it comes to stocks. Gold doesn't have earnings. Stocks recently have had incredibly resilient earnings. Despite the war, despite inflation, despite everything that we've seen, which has been very negative for precious metals, understand rates moving higher is not positive for stocks. It's just not enough to topple stocks over because earnings for corporations, specifically the AI buzz and excitement and data center buildouts, all that money pouring into the system and foreign investment pouring into that system is propping up stocks. Stocks are holding up well because earnings have held up well. In fact, one thing to note, we can prove this theory with PE ratios actually falling in the stock market because people are worried about the Middle East. People are worried about higher interest rates. PE ratios have been falling. So why isn't the stock market falling? It's because price is holding up okay because earnings have been so strong to support, even though the price to earnings ratio coming down usually coincides with the stock market pulling back. The reason it hasn't is because the earnings part of that calculation has been so strong that it's been supportive of this market. Now, again, understand, stocks are still sideways for a couple months now. They're not like necessarily up 50% while gold's down. They're just holding up sideways, and they're not ignoring the war, because I'll tell you what, if the war ends, if we get some, actual de-escalation and it's over with, stocks are going to move higher. So is gold, probably. Does that make sense? I hope that, because trust me, I understand that frustration. As someone who would like to buy companies, buy stocks, it has been difficult to do so for a while because the very brief pullbacks are supported heavily by strong corporate earnings. And to add a little insult to injury, a lot of people, myself included, are kind of skeptical about like the AI CapEx spending cycle. Like, I think we're one earnings cycle away, not necessarily this earnings cycle, but like one announcement away from seeing some tough times for some of the tech stocks if some of the Magnificent Seven stocks like Microsoft, Meta, Amazon, NVIDIA, if any of the big CapEx spenders, the ones spending all this money on AI, if they say, we got to pull back on our spending in any capacity, tech stocks are going to take a hit, and that's going to tumble the rest of the market, I think. I don't know when that happens, and I'm not trying to make that call. I'm not short the market. I have stocks long in my portfolio. I'm just pointing out that it's been frustrating. I've been waiting for those pullbacks that just have not come because of the perpetual increase in spending that seems to be going on. So trust me when I say I hear your frustration. Gold has been a horrible place to be. If you've been sitting long in gold this year, it has been rough. I get it. Does that change anytime soon? Well, ask oil, because oil moving back higher is reflective of geopolitical escalations potentially coming back into the picture. And if that happens, what happens to inflation? Inflation goes higher. If you want to talk about what led us here to this inflation spike that we've recently seen, right? What led us here? Let me pull it up just so we can have a reference here. So what led to this bout of inflation that we're now going through again largely is contributed to, or was contributed to, by the rise in oil prices, energy prices going up. Okay, so if energy prices going up caused inflation to rise, well, understand a big piece of the puzzle of why we saw a fall off in inflation, even more so than expectations, which is very important to note. The red dot here in Edgefinder represents expectations. So forecasts were for 3.8% inflation. We got 3.5%. So we got a really nice cool off in inflation. Context is important here, though. And there's two things to say. Context wise, during that period of time, we did get a big fall off in oil prices, which really helped the inflation cool off. However, someone corrected me and pointed out in my video comment section, which I didn't do a good enough job describing in yesterday's video. Core CPI. What is core CPI? Core CPI minuses out food and energy. Okay. Now, why does that matter? Core CPI was also very cool. So taking out the energy factor, aka oil prices, core CPI was also cool. So it was a really good print. The question, though, is what happens now with oil prices? Because that all that work, all that good data could be completely reversed if oil prices skyrocket again. That's why it's really difficult here to make a decisive like, oh yeah, gold's going to start grinding higher. We're going to just have this monster uptrend. I'm challenged by that as long as we have the geopolitical tensions going on. So again, I mentioned in my video yesterday, I am a buy high, sell higher type of trader. What that means is that when we get a move like this to me from a short-term trading perspective is not an attractive time to buy this. Even if I have a slight bullish lean on gold, there's nothing I can do here. I have to wait, right? I have to wait again because of my style of trading. Buy high, sell higher means you're a trend follower, means you wait for this thing to do something like this, right? And you start looking at picking up the pieces on retests. That's what buy high, sell higher looks like, right? The reason I'm very deliberately that way in my trading is because I find it more difficult to try and fight this and be bullish in here. I'd rather be bearish if I have a macro view that's bearish on pullbacks within this downtrend. And if I'm looking to be bullish, which I'm leaning slightly towards due to the cooler inflation, softer jobs data, if that narrative continues and we get some kind of breakout, then I'll look to potentially join the move. But I'll sit on my hands and be in a ready position until I see price start to agree with my bias. Otherwise, I will not take trades, right? Because there's nothing about this chart that tells me I need to be right now in a hurry to be long. And maybe this is the bottom. I have no idea, right? Nobody does. Maybe that's the bottom, but maybe it's not. Maybe we have another leg lower to go in gold. Maybe we're headed back to 3,500. Maybe this prospect of, hey, I think there might be a breakout coming in gold. Maybe there is, but maybe it's not until we get another flush out and then we break out, right? That's what I'm open-minded to with this idea of like, okay, I want to be long gold if price starts to agree with me. And what am I talking about with agree with me? Well, in my video yesterday, I went over it a little bit, but when we look at gold, fundamentally, we have inflation cooling. We have economic growth that has been a little soft on the PMI's data. Consumer confidence still quite low and worse than expected recently. The non-farm payroll number, ADP number, I'm kind of like in the camp of thinking I'd be potentially interested, depending on how COT data comes in this week, which today is Thursday. We'll get new COT data tomorrow. I'd also like to see the trend flip bullish. There's a potential here for a bullish setup, but it's not ready yet. And so I'm going to wait on the sidelines. And thank goodness I have done so, even though it's been frustrating to be like, hey, yeah, guys, I'm still neutral on gold. I know that's not very exciting. I know it doesn't get me as many attention views on YouTube and social media. But I am here first and foremost to actually do what I do, which is trade the markets the best I know how. And there are times to do nothing and wait. That's it. Silver is basically the same as gold, just more volatile. Yeah, that is mostly true. There are times where they have, similar performance, other times where one greatly underperforms or overperforms the other. But look at silver, man. Silver is already back down to those lows. Silver is taking it on the chin today, getting knocked out, it looks like. We'll see what happens. Yeah, look at that. Silver down 3, gold down 1.5. Pretty rough day for the metals. Let's see, what else do we have? Do we have anything setting up here today? Dollar also flipping even into slight negative territory. I just saw that for a second. Let's see what that's about. Yeah, so technicals. Well, dollar's probably holding up okay today. We are, and this is worth mentioning, DXY is back to this level of support. This level for bulls has been staunchly holding for some time, this 100.6 level. We tested that here today. Prices so far bouncing back a little bit. Yeah, we'll see. Gold is purging them bulls. It's been a tough year for gold bulls, I would have to say. I think you have different cohorts, though. There's some bulls out there who are in this audience, I bet you right now, who are like, yes, 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 go lower. Send it to you know where. I'm ready to buy gold. I've been waiting for this pullback. There's that group of traders out, or I wouldn't even call those traders. I would call those, more like investors, like people who like gold for the long term. There's a market for everybody, man. Like and by the way, that's me too. Like long term gold, send it lower. I'm thrilled if it goes lower, because I like personally the idea of having some precious metals in my portfolio for the long term. Like if you send it on down and let me know, is that any of you guys? Give me a me in the chat. If you're somebody who is like long term, like you are like not a short term trader, or you do both, give me a me in the chat. If you are that person, if you're like, oh baby, give me 3,200 gold, give me 3,000 gold. Yes, people are going to panic. People are going to freak out. It's going to be painful for a lot of people. But for the long-term people who are like not using leverage, they're not using a margin account. Like they're just talking about, some people might even go physically buy some precious metals, stick them in the ground. I don't know. People who buy the physical stuff, right? There are people like that who are applauding. They're like, keep going. Go, like, let them sell the gold. I want to buy the gold at a lower price, right? There's all sorts of different ways to approach the markets. For me personally, so again, to put it very straightforward, short term, let me say this. Short term, I'm neutral. I don't have any positions on. I'm watching for a breakout. I'm watching for price action to start to flip the other direction, but I don't have any evidence of it, so I'm not placing any trades. Short term, there is nothing for me to do here on gold. I can't short it at the lows here. I also don't have the macro bearish view that I had, 4 months ago or 3 months ago. I just don't have the same conviction to the sell side. On the bull side, though, price action completely does not work, right? Price action completely rejecting. Sellers are in full control. Bulls are nowhere to be found for now, okay? Long term, I look at this and I say, okay, so what I actually did, I sold GDX short put, I sold puts on GDX down at the 68 strike price. If price goes down on GDX, what is GDX? It's a gold miners ETF. It's a conglomerate of companies that mine gold, okay? I wouldn't mind holding that in my portfolio for a little while because I think long-term gold's going higher. Personally, I don't know when. That could be 6 months, 12 months, 2 years from now. But it's more of like a sitting in the portfolio and let it wait. If we go down to those levels, I'll get the chance to buy those shares through my cash secured put. If you don't know what cash secured puts are, it's an options trade where you sell a put rather than buying a put. So you want the price to go sideways or up. But if it goes down to my level, I can get assigned the shares. Essentially, I buy them at a discount here around 68 per share. If that happens, I'm perfectly happy with that concept. In fact, it's a small position relative to the account, and I wouldn't mind DCAing or dollar cost averaging if gold miners continue to move lower. That's a very different approach, very different than somebody who is, watching the 4-hour tight stop, looking for a breakout. Like those are two styles. You can do both. I do both. but they're very different, right? So if you're doing the former, if you're doing like the long-term approach, leverage is not your friend. People who use leverage on long-term investing, it's a risky game to play, right? Because if you are not right in your timing, you can get completely taken out back and, you know, hit over the head with a baseball bat kind of thing. So be careful with that stuff. But, you know, my opinion on it is long term, I think gold starting to get more attractive. And so playing the gold miners, who obviously have correlation to the price of gold, is attractive to me. But in the short term, man, price action looks horrible. Sellers just keep taking it lower, and there is nothing for me to do here. So I have no active short-term positions on gold. I have one active long-term position on gold through my GDX short put position, essentially a long-term kind of dollar cost averaging approach that I'm looking to dip my feet in on gold at these levels. Hopefully that makes sense. But yes, you can have simultaneously longer term strategies going on and shorter term stuff. In fact, I think it's, you know, from a diversification standpoint, personally, I think that's worth exploring. Obviously, you do what you want, not financial advice here, just sharing my thoughts and opinions. I think having a couple different strategies and watching a various selection of markets spreads things out rather than being so concentrated and, you know, all your wealth is tied up to what the price of gold is doing today. Like that is be careful with that, right? Because it can be, you can enter into a period of, you know, 3-4 months where you're just in a funk. I know personally, and this is the last thing I'll say before I throw over the show to our next show host. I know personally, unfortunately, a lot of people who sent me emails, direct messages, etc., who said that this year really messed them up on gold and that they had been doing really well for the last few years. And again, I've made this point many times on my channel. But if you have done really well in gold in the last few years, what are the odds that you had a very bullish outlook on gold and you were riding that easy trend to the upside? It was a wonderful time to be long gold the last few years. But a lot of those same people, again, I received several emails, messages, DMs this year, people kind of bummed out like, hey, my strategy was working phenomenally. The problem is their strategy was basically just long gold. Long gold, long gold, it never fails, right? Well, now you are learning, unfortunately, the hard way. We all learn this. I'm not making fun of anybody. We all, unfortunately, at some point, learn the hard lessons of markets, which is market conditions change. The macro completely shifted. Inflation started rising. Global interest rates started rising again. And that just completely squandered the easy uptrend in gold that we saw the last few years. Will it come back? Certainly at some point it will, but I don't know exactly when that is. In the meantime, I'll trend follow price and I'll trend follow the macro, which is what I try to do in my approach to markets. With that said, guys, a couple things here for you. We are doing our summer sale right now. If you're interested in getting access to Edge Finder, we'll drop a link here in the live stream chat to where you can get access to that. I'm also going to, on the screen here, if it's easier for you, you can just scan the QR code there to contact our support team about getting set up with a copy. I know a lot of people have been waiting for a chance to pick up a copy of Edge Finder at our super low prices. That 40% off sale is happening right now. The link is in the live stream chat, or you can scan the QR code below my camera, which is either option will take you to the same place. If you'd like to discuss payment plans, if you'd like to discuss questions you might have about the product, our team is happy to help. With that said, up next, we have the one and only Miko Audu going over technical trade setups now that he is watching in this market. Stay tuned. He's up just after this quick break. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Okay guys, what's up? Hope everyone is doing well. Glad to be back on the stream. As always guys, I'll go through a bunch of markets which I'm looking at, intraday swing as well across commodities, Forex, even take a look at a bit of crypto as well. But if you have any particular requests, any markets you're trading, or just want my opinion, feel free to stick it in the chat. More than happy to take a look and go through some markets with you. But I wanted to start with the DXY because price action has been pretty interesting. A bit of yo-yo situation, bearish some days, bullish some days. Altogether, we haven't really traveled in any particular direction. We've come back into support. It looks like price is reclaiming that same level. And it looks like we're just basically stuck within the range. Yesterday, we had a lot of bearish momentum. It looked at one point we might actually be getting a breakout and potentially a lot more downside. But over the course of the Asian session coming to London, New York, it looks like we're starting to reclaim that level. So I would say if we can stay above this, I would actually expect to see another swing to the higher end of the range, which could potentially mean more USD strength coming into the market, maybe shorts on euro, shorts on pound. But to be honest, direction isn't particularly clear, especially when we're zoomed in on the 4 hour and intraday price action. If we do go to the weekly chart, look at the bigger picture, it looks a little bit clearer, at least in my eyes anyway. And basically what I'm reading on the weekly chart is we were in this long-term range for about a year. We had the breakout, and now it's just a situation. If we can hold this level, hold above this level, I'm very, very bullish on USD, looking for us to come back to 103, 104, maybe even higher. If we do close back below that zone, back within the range, especially on the weekly chart, well, this could potentially be a bit of a fake out, and there's a lot of room to the downside for us to travel in. So there is opportunities in both directions, but as of now, we're still holding support. We're still trading above the range. So on the higher time frame, I am pretty bullish, looking for more upside. Whether we see, excuse me, whether we see the lower time frame support that is a different question. At the moment, like I said, it looks like we are reclaiming that support level. So potentially that could lead to some more upside, but it's nothing really of an opportunity which I'm looking to trade myself. I think pound USD in terms of the USD pairs has been very interesting, especially with the pound strength we just got in yesterday. Definitely made things awkward because coming into the week, I was keeping an eye on this zone. Potentially, if I saw a bit more rejection, I could even look to take some shorts, but didn't really see what I was looking for. Then, of course, yesterday happened and we blew straight through that zone. So to be honest, looking again at the bigger picture for pound, I'm just going to leave this one alone because, again, we're still within this long-term range. We didn't break support here. We've had this pullback. We've now broken through some structure on the daily chart. Direction isn't particularly clear. There are some levels intraday which look good for a bounce, but in terms of any persistent swing or persistent trend, nothing's really quite clear with pound USD. So I do like the breakout here, and this level could prove to be sturdy, and we could see a really nice reaction here. But would I bet on more than that? No, not really. There isn't much to support that kind of bias, even with the downside as well. So I'm being very reluctant to trade a market like pound USD. Aussie dollar, we've seen a lot of retracement for this one. We're back into some areas here where we could see some downside. At the moment, I would say it's a bit premature to be looking for some shorts, or at least how I would enter the market. I like how corrective we are. It looks like we're starting to stall at this zone. So there could be a bit of downside for Aussie. But again, until I see momentum coming into the picture, some strength, I would be very reluctant to find any entries there. And especially with the DXY, just not really showing much clarity right now. It's at support. Maybe we're going to see some strength come in. I would like to see some real follow through from the DXY before getting short on Aussie, pound, euro, etc. I think in terms of clarity, in terms of the USD pairs, the one that looks the best to me would be dollar yen. And that's more so just because we've just got that natural yen weakness, which is still very persistent. Maybe not as much at the moment, but in terms of the trend, it's still very much up. Of course, there is that kind of danger with dollar yen, is that we could see an intervention. We could see a very dramatic sell-off at pretty much any time. So there is that risk. But again, that's all about your risk appetite. If that's something that will put you off the opportunity, of course, don't trade it. If you don't mind that, well, make sure you're managing your risk and you're prepared for potentially the worst and you're getting slipped that could very much happen as well. Maybe sticking to a more high time frame could be the better way to approach it. But the way I see it with dollar yen, I mean, price action right now is quite messy. It looks like we're consolidating here, but if we can see some strength come back into the market, maybe a break of resistance here, I do think longs above that look pretty clean, and I should be expecting more upside. Looking across the board for other yen pairs, we are very, very bullish. I'm seeing requests for gold. We can absolutely take a look. What's up, Yoshi? Long time no see. Absolutely. Hope you're doing well. As to everyone on the stream as well. But yeah, I'm seeing a lot of people speak about gold. Gold's interesting. We're looking pretty bearish at the moment. It looks like we're coming right back into that 39.70, 39.60 level of support, which we were testing a few weeks back. What's the plan for gold? Well, personally, I wouldn't be doing anything. I say that because would I be looking to buy? No. Not that it's not at a good level. It's just, it's too early for the buy. We're not really seeing any evidence of buyers coming into the market, apart from, of course, we held as support. But I need a bit more than that for me to be bullish in gold, especially because we've been bearish for the past few months now. You know, price has just been falling, and in all honesty, price could very much break through that zone within 1 day's worth of price action. So I'm not going to go long. Again, I'm always looking for high probability opportunities. You know, where's the path of least resistance? What's the more likely move price could make? I wouldn't necessarily bet on buys. I do think we'll come into some interesting areas where we could see some reversals, where we could turn around. But I would wait for price to make that move first, and then I'll be more than happy to take pullbacks on the way up. If the opportunities does take shape. But I wouldn't look to go long. Now, would I look to go short? No, not either. I wouldn't look to go short because of the location in which we're trading. There's not much opportunity right now, especially with price basically coming back into the lows. So I wouldn't look to short. I wouldn't look to long. Maybe if I was very intraday, let's see if I dropped like a 15-minute chart. If I was very intraday, there might be something as we approach this zone. I mean, that was a really aggressive move just now there for gold. But if we were to have like a nice corrective pullback, I could see us forming another lower high and another move down. So that's very intraday. The goal with this type of opportunity is you're not looking to stay here for a long time. You're looking to be very in and out. But in terms of a swing opportunity, I don't see much of that from the sells or the buys. Until maybe we see a lot of strength come in, and yeah, I would be invested for a pullback and more downside. Or of course, we decide we want to turn around, break some structure. That could be interesting, but that could take multiple days, even multiple weeks to happen. So I don't really see much from gold, to be honest. I'm personally sitting on the sidelines, and unless maybe you're very intraday looking for a quick opportunity, I don't see much. Yeah, I don't see much. And I had a look at silver before jumping on as well, and it looks like silver's pretty much, in terms of price action, doing the exact same thing. Back at support, kind of looking a little bit tired. Will it break support? It could do. Will it bounce? It could do. I wouldn't bet on either situation right now. I want to wait for price to make up its mind and then look to take the continuation of that. I wouldn't say it's kind of made up its mind yet. And in silver's case, there is a bit more room to the downside. I wouldn't be totally surprised if we do go and break through the floor and maybe have a bit more of a significant test of this area. I mean, this was a really nice range. We spent a few weeks there before a big explosion to the upside. Maybe potentially we could see some more buyers waiting to get involved around the 52.50 area, which is a pretty big psychological level. After smashing into 100, push into 50 kind of makes sense. So yeah, metals, I'll be cautious. Unless I'm very intraday, I wouldn't look to try and push anything really. Yes, we can take a look at New Zealand dollar as well. Absolutely. Of course, if you guys have any requests, just stick it in the chat. And if I've got time, I will absolutely take a look. So New Zealand dollar is interesting as well. I say this because USD has just been back and forth for the past week or two, but NZD hasn't. This actually has had some direction to it, purely because of NZD strength, of course. So if I was looking to trade New Zealand dollar here, I would be looking for buys, but I would be becoming a lot more skeptical, and I wouldn't try and push targets too far because we are coming back into some resistance right now. Clearly, the buyers are in control. If we're going to be looking at the price action over the past week, I would be looking at pullbacks into this area. I would keep it intraday, keep it probably like hour chart and below. If we could see a healthy pullback into this zone, I think that's a smart place for a buy, especially if we're moving this kind of descending channel here. And that could be a lovely swing back to highs. That could be a take profit onto the next trade. I wouldn't try and push further than that personally. Of course, doesn't mean we can't go higher, but because number one, we've already had a pretty big move, so I wouldn't try and bet on more of that, especially in FX where we fluctuate all the time. If we've had a big move, very rarely would I bet on more, on another big move happening. It doesn't normally happen unless we have some serious news coming in. So yeah, New Zealand dollar, I would favor the buys. Momentum is definitely favor the buys at the moment, but we do have some obstacles above our head, and the fact is DXY hasn't really made up its mind yet either. So I will be careful about any kind of swing opportunity. And then again, looking at the larger time frame for New Zealand dollar, you can see we've just been up and down, up and down. So in a market like this, especially if you're looking for like longer term moves, your best bet is being positioned at the extremes, buying as low as possible, selling as high as possible. That's really where you want to position yourself. If we're looking for opportunities intraday inside of this, we want to be fairly in and out, lower time frame. Take advantage of what the market is currently rewarding right now, and then on to the next one. So yeah, hopefully that made sense. I can take a look at pound entity as well. Yeah, I think I did say messy, didn't I? So yeah, pound entity, not really a market I've been keeping too much tabs on, but absolutely can take a look. So pound entity, okay, I like this. We're back at the highs there. I mean, this is a market as ranging pretty well. I would say that we just came back to the high of the range there and had a pretty good rejection of it. Now we're coming back to the more the midpoint of the range, which is where things get a little bit more tricky, especially from a trading standpoint, because naturally, as I always say, if you're trading a range, well, you want to be as high as possible or as low. Those are your sensible opportunities. When price starts to drift towards the middle of the range, that's where it kind of becomes anyone's game. We could see buyer step in, seller step in, we could consolidate. It just becomes more tricky to maneuver. But I would be pretty bearish here, especially because of the momentum over the past few days. And I like the way that we did pull back into the zone and respected it pretty well. So if I was looking for an opportunity, a very short-term opportunity for pound NZD, I would suggest if we could see another push back to resistance here and then see if we can take a sell off that. Again, targets don't even necessarily have to be back at the low. Let's say if you find support here, that could be a nice target. Or even before that as well. I mean, would have to see how price action sets up before we allocate targets, but I would say this makes a lot of sense. Push back into resistance. We've already seen price respect it very well. A clear zone where sellers have shown a lot of intent. If we can get there again, as long as we can see some rejection, I think that's a pretty smart place for a short, especially on the short term. In terms of like a longer term bias, maybe we push to the opposite end of the range, but I wouldn't necessarily bank on that right now, especially not with a trade. So yeah, I'll be a bit careful with pound entity. It's just not in the most it's not in the most advantageous location right now. We're coming back into noise, where I kind of expect to see price action that resembles more like this, which is not entirely attractive. But yeah, I'll be a bit careful there. But to be honest, in regards of FX, mainly my focus has been with FX with major currencies. Euro USD, I've been looking at pound USD quite a lot. But now that DXY is kind of at support, I want to see if DXY can hold that level. And if that is the case, if DXY does hold that level, I want to see a more confirming, more significant close above this support level. If we can see that, then going into next week, or at least for the end of this week, but going into next week, I would have a bias that looks something like this. At the very least, back into the midpoint of the range. I wouldn't necessarily bank on that, but a push to the midpoint kind of makes sense. And we could go further as well. In terms of the indices, they've been a bit awkward, especially the Nasdaq, S&P as well. But you can see the Nasdaq price action hasn't been great. Very, very awkward. Range bound again, a lot of range bound markets at the moment. Yeah, we've had another bullish attempt this week to try and see some new highs. That failed. We just came back and respected last week's high, and we came straight back down. So it looks as if these lower highs are just continuing. And what that tells me is that the probability for a much larger pullback on the higher time frames is becoming increasingly more likely. And what I mean by that is potentially a pullback to some structure around 26K. I would say that's our next big significant level. The fact that we're struggling to make new highs continuously probably means that we're going to come lower to go and find some more buys to then actually see higher prices. So I wouldn't necessarily try and trade this just yet. It's quite awkward right now. I would wait for price to give me that breakout, show me that strength from the bears, and then there could be some nice pullbacks along the way. And then we can speak about the buys at a later date. But in terms of buys now, it looks very, very difficult to find a good trade to go long. I would be very, very careful, very, very cautious about looking for any type of long opportunities on the Nasdaq. The S&P, same situation there as well. I'll be very, very cautious. Again, you can see prices now coming back into some local resistance, and it's looking very, very tired. It well could break through, and in fact, if it does, especially with some strength, that would make me very bullish again, and then I'll just be expecting the continuation of the trend. But if we really struggle here, and if we're going to do something along the lines of the Nasdaq, we could very much roll back over. Now, I'm always predominantly looking for longs on the S&P, Nasdaq indices. It takes a lot for me to look for a short, and that's just because of the general nature of the market. It doesn't really make sense to me, especially if I'm swing trading, to look for any type of short, really, unless structure is very much pointing down. So because of that, my thinking is always, can I find a good buy opportunity? So it's not about, okay, is this going higher or lower? It's more so, is there a good buy? The direction will sort itself out in the long term. So because of that thinking, can I find a good buy? Well, if there isn't a good buy, then it's very much just sit on your hands, be patient. And I don't think this is looking like a good buy opportunity, especially in the 4-hour chart. We're seeing a lot of struggle back at this prior high from a few weeks ago. And you can see in terms of the price action as well, we're not really seeing much strength. If you compare it to previous bull markets, when the trend looks really healthy, momentum is quite clear and evident to see. This is the type of market where I would say, okay, I can find a lot of good buy opportunities. At the moment, not so much. So I'd be very skeptical. But again, like I said, if we do see a comfortable break of this and some newfound momentum comes into the market, then yeah, maybe there's some nice pullbacks can follow shortly afterwards. But at the moment, it looks really difficult. US 30 is not too bad, actually. Again, we are looking a little bit tired here. I did say on my stream yesterday that if US 30 can maybe make a convincing break out of this range, then perhaps some pullbacks afterwards can make a lot of sense, back to highs and maybe beyond that as well. But at the moment, we're having a little bit of difficulty to try and break the high here, and we very well could roll back over. So indices, yeah, I'll put a pin in them right now. It could change drastically. We could have a news event, things look different, but the theme is a lot of them look very tired. They're failing at resistance. I wouldn't bet on the continuation unless I see evidence for that. And again, it goes back to the dollar as well. The dollar is going to have a big say in terms of the direction for the next few days, the next week as well, for the indices as well. In terms of the crypto, do I trade? Yes, I do trade the Nasdaq. Not as much as I do trade currencies, but when there's a nice swing opportunity on the 4H, I will look to trade the Nasdaq. Absolutely. Maybe know some tips if you're able to just pass my evaluation account with Lucid. Congratulations, well done. In terms of tips of trading the Nasdaq, well, I trade it on the 4 hour. I predominantly look to swing trade, just follow the trend. So if you're a bit more intraday, although the tips kind of do translate lower time frame, but lower time frame is a little bit more tricky. But from a swing perspective, with the Nasdaq, as I said previously, the natural trend of the market is to continue higher. So when I am trading Nasdaq or the S&P, my thought process is just literally, can I find a good buy opportunity? I'm not concerned about direction. If the market's going to have a deeper pullback than expected, or maybe it might head lower for a few days, I'm just trying to find it a good buy. And from what I've been trading with the Nasdaq, really just trying to find entries as low as you can within the range seems to be quite fruitful. Because the big difference between kind of currency trading and trading the indices, I would say, is that the indices can be quite violent in their pullbacks. Currencies kind of correct and they take their time. Of course, there'll be times where they're violent too. But what I've noticed is that indices are a bit more violent, they're a bit more sharp. You know, when we have a bullish move, we can really be really aggressive, and when we retrace, we can be quite aggressive as well, and the trend still continues. So what I would suggest is plotting your levels, plotting areas where price has proven to find support, and then look for opportunities, especially on the 4 hour, even the daily chart, where prices recently found support before, and looking for the long-term swings and not getting too caught up about the intraday price action. Because like I said, you can get some very violent price action intraday, which kind of knock you off your trade or distract you from the larger play. But all you have to remind yourself is, you know, this is the market you're trading. You know, buys make the most sense in terms of opportunities. Sells don't really make much sense unless it's, you know, categorically a bear market like this. Okay, I can understand looking for sells, but long term, I'm mainly just focusing on finding key levels where prices showing a lot of rejection previously, like this low here as well, and then just basically studying price, how it reacts. If it's showing good rejection, looks like it's failing to break, placing myself long there, and then looking for the bigger move, not being afraid to push back to highs or big targets as well. Currencies, I'm always a bit more conservative when I take profits. I'm not trying to push the trade too far, just because currencies, they do fluctuate a lot. But indices, Nasdaq, I'm always trying to be a bit more aggressive with targets. But yeah, that's kind of more general advice for kind of a swing approach. Intraday, it can get a bit more technical. In terms of Bitcoin though, Bitcoin's interesting. Coming into the week, I was pretty bearish because we were coming back into some supply zones on our left there. And really the thought process was, okay, if we're going to struggle here, I would expect some retracement, at very least back into this zone. But I also talked about this range here as well. And then we had the CPI early in the week that took us back into this zone here as well. And then, yeah, I was on my stream yesterday and I said, if price continues to struggle here, shorts make a lot of sense there too. I could see price pushing back into this zone here as well. So if I was to drop a little bit lower, a good opportunity for BTC here, I would suggest, is if price can pull back. Let me just clean up the chart. If price can pull back, respect this zone, this looks like a really nice place for a short, and then push back into support. Something like this. I mean, you can even have a safer stop loss, which would be above the highs here, but I'll probably be a bit more aggressive. And targets back at support here, or even just local targets back to where support is forming at the moment. But yeah, BTC, I do have a short-term bearish bias just because of the resistance we're trading at and the fact that price is really struggling. If, of course, we suddenly break through that, I will look to revisit that bias, especially if we take up this high here. That's when I'll really look to reinvestigate and maybe look for some long-term long-term buys. But at the moment, I'm pretty bearish here. As long as this level holds, at least looking for a push back into support. We may go further, but that at the moment is my expectation. But yeah, guys, we have run out of time. I do appreciate Nick and the team for having me on the stream. If you guys have found the analysis useful, feel free to check out my channel. I do a lot more similar content over there. But guys, really appreciate you listening in. If you have enjoyed it, drop a like on the stream. But guys, have a great day. I'll catch you all in the next one. Take care.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. How's everyone doing today? Hope you guys are doing fantastic. Let's see what's going on. I haven't really looked at much, to be honest with you guys. So we're going to get a fresh look here, pull up currency strength, the edge finder. Let's go to top setups page. Let's see, has anything changed here? One thing I want to look for. Let me look at the pound basket. I want to look at what that's looking like here. Good morning, Kier, Jeremy, Simo. Hope you guys are doing good. Okay, pound basket's still doing pretty well. In fact, you're getting some very bullish readings on that one. Okay, so let's see. Let's go to majors first. We're going to go top down here. Majors first, you're getting some dollar softness. Okay, awesome. Dollar CAD, very bearish. Dollar Swiss just getting neutral, borderline of a bearish reading. Euro, Kiwi, Aussie, and pound doing well. What the heck? Kimberly Allen. Let's go ahead and, okay, so very bearish readings, or very bearish on dollar CAD. That's what that is. Dollar CAD. Oh my goodness. Howdy, Tiger. Well, Sluggy, to answer your question, now I'm looking at dollar CAD. It's getting sold off here. It's getting very close to that level that I'm looking for. Very, very good. So what's going on with Canada? I know they had a good jobs number. Oh, that's right. They had BOC. They had a relatively hawkish tone, is what they say. When was this? Let's see. Was it yesterday, guys? Was it yesterday? Let's see. Bank of Canada. Yeah, monetary report. Okay, so it was yesterday, and it seems like they had a relatively hawkish tone, and so you're seeing a liftoff into the Canadian dollar. Okay, so this is interesting for me. I like to see this. So my original thought process is I want to see if I can get some support here at 1.395 or 1.39, right where this 200-day moving average is. So I want to continue to see some dollar softness in the picture, and then I would look to go ahead and buy some US dollar. That's very nice to see there. As far as other things that I'm looking at, pound basket looks kind of good. What is pound dollar doing today? It's reacting off of that resistance level. In fact, pound had a lot of strength yesterday, up 1.1%, because they had someone coming into the picture that was more fiscally responsible, and so the market really loved that. And so you're seeing pound up there today. What is pound Kiwi doing? Because I wanted to go in and get some pound Kiwi. Okay. Oh, what is it doing from edge finder score perspective? Pound Kiwi. Nothing? Oh, that's why. Still neutral. Dang it. Pound Kiwi looks good. Marco and I were talking about this pair here. We especially like that You had this drop off here, this level of support here. You have the 200-day moving average. It seems like we had a bounce yesterday, but you're pulling back on that today. So we'll see if that's a good risk to find opportunity. Interesting though. What's Kiwi dollar doing? Kiwi dollar is pretty strong. Pretty strong Kiwi dollar. You know what? What's pound Aussie doing? Is all pound Aussie getting a better score? Pound Aussie. Very bullish reading. So very different there. So the question is, do I want the pound Aussie or the pound Kiwi? Let's do this. We're going to go to pound Kiwi, and I'm going to show you guys side by side what exactly I'm looking at. So I'm going to have to redraw this on pound Kiwi, but essentially you have this level of support somewhere here, right? This is what I'm looking at. So there's kind of two outcomes here that I'm looking for. Okay, and then I'm going to go as far as take profit level. Let's just do something simple. Let's just do like this. All right, what am I looking for on these two? So pound Kiwi and pound Aussie. This is pound Aussie on the left and pound Kiwi's on the right. We're going to zoom out here. We all know pound Aussie has been very, very bearish in this year, right? We know that for sure. Super bearish momentum, and it's kind of stalling out here in recent times. Now you're starting to see somewhat of a V-shaped recovery. But the only thing that worries me on pound Aussie is that you still need to overcome this level of resistance and this 200-day moving average. Pound Kiwi, a little bit different, right? You have, it's kind of sideways chopping here, this recent uptrend. And then from a fib level, if you put the low to high, you are at the 38.2 and the 50. So it looks pretty good there. My question is, do I jump the gun and buy pound Aussie or pound Kiwi? Pound Kiwi seems to be reacting quite nicely to this level here. I'll be quite honest with you guys. Pound Aussie still needs to overcome this right here. What is Australia doing? What is the Aussie basket doing? Let's see. Aussie basket. All right, too. Let's look at this equal surprise index. Let's see what people have been doing on a relative basis. So which one's stronger, pound or Aussie? Pound is stronger than Aussie. Is pound stronger than Kiwi? Not quite. Okay. Let's look at COT. Data history. Let's go to British pound. Ooh, not good. Not good. Offloading there. Australian dollar, clearly offloading. And Kiwi dollar, flat. Oh, no demand, damn near. This is tricky. This one is like a relative value here. It's still within an uptrend, and this one needs to become an uptrend. We'll see. We'll see what I do on this one. Pound Aussie is getting a very bullish reading, though. Let's actually look at rate projections, too. Let's see what that could look like. Economic data, interest rates, interest rate projections. And then we're going to toggle only pound. We're going to toggle off euro, toggle off yen, toggle off this. Pound is expected to hike. Now let's compare it with Australian dollar. Australian dollar is looking to stay flat, it seems like, while the pound hikes. So that's actually good. Oops, didn't mean to reset that. All right, so pound only, take off this, take off this, take off this. Okay, so this is what I'm looking at here. From a, not even just looking at the near term, but just looking forward, looking here, you can see that the Australian dollar is higher right now. However, they're looking to stay steady versus the pound, the UK, is looking to hike rates. Now let's compare pound with Kiwi now. Pound with Kiwi. Kiwi's also looking to raise rates, you know? So maybe the better one would be pound Aussie, and it's getting a bullish reading. Let's look at their heat maps, shall we? UK had some GDP come out. What did it look like? Did it not update yet? Let's see. For today, if I'm not mistaken, GDP beat expectations, which is good. So that's going to improve the score here. Yeah, man. I mean, look at the UK. Unemployment rate's ticking down lower, 4.9%. PPI came in line. CPI came in cooler, which is bearish. Then you have retail sales is doing good, services is doing good, manufacturing missed, and GDP growth did better. Okay, now let's look at Aussie. A different story. CPI cooled recently. You know what, though? The inflation in Australia has been trending lower as I'm thinking about it. Inflation, CPI. Let's look at Australia. Yeah, trending lower. And in the UK, dang. Tricky situation, guys. Tricky situation. What is the chat saying? They did mention a couple of hikes if oil remains elevated. I am too good at reading past economic news and price charts. Here's neutral. What's up, Alan? Keep up the good work. Pound Kiwi is an interesting one. It is an interesting one. Here's you're in pound Kiwi longs. Yeah, Tony, you bring up a good point. Like the reading is good on Edge Finder, but the technical kind of breakout hasn't really proven itself just yet. Let's look at New Zealand's inflation. Yeah, New Zealand kind of steady up there. Geez, this is a tough one, guys. This is a tough one. I will say, I have Marco here in the background ready to join me. Go ahead and join that Telegram channel, guys. Free value, free market analysis, free polls every day, free bonus content. You also have discounts for prop firms and everything. Definitely go ahead and join that. I promise you will enjoy it. This is a tough one, guys. I am in a pickle right now. I am in between pound Kiwi and pound Aussie. Let's make it fun. Let's go to seasonality. We're gonna try and compile as many confluences as we possibly can. Okay, pound Kiwi. Should be bullish here on an average 10-year historical data set. Pound Aussie, choppy but higher nonetheless. What else can I look at? I imagine the swaps won't be good. Let's look at, what else can we look at? $0.7071 ascending AU. Yeah, the rate differentials do favor Australia. But then it's also like they favor them now, but then the market prices in for its markets forward looking, right? So like the expectations by the end of the year are different in favor of one or the other. That would really change the price action. I think I'm gonna not force the trade. Pound Aussie looks good from a score perspective. However, I need to see it overcome this right here. That's kind of what I'm going to look for. Pound Kiwi seems to be reacting to this level of support as well, but the score is not there. So both of them are not ready. They're not lined up. Pound Kiwi's neutral. So I would rather wait for that to improve. Marco, how are you, man?
Hello. Doing pretty well.
I need your help on this.
Yep.
On the fence. I like the pound basket. It's pretty strong at the moment. The last night or early this morning came out well. You have the economic scorecard on the UK looking quite well. Let me show it to you. Doing quite well, and this hasn't updated yet. The GDP. My question becomes, or is, pound Aussie or pound Kiwi? Pound Aussie has the score bullish, but it's not making the technical confirmation yet. Pound Kiwi has a technical confirmation, but doesn't have the score bullish.
What did the seasonality say?
Seasonality, I think, favored Pound Aussie more, if I'm not mistaken.
Pound Aussie.
Seasonality. No, actually, no, I'm wrong. Pound Aussie is somewhat choppy, but like a slow grind higher. Oops, didn't mean to do that. Versus Pound Kiwi is different. It's kind of a little bit more of a straight up move there.
Yep. I would say Pound NZD because of that V reversal that we had. So possibly that could happen again. Again, I'm sticking to the story that the RBNZ is too hawkish and that there's no need to be so hawkish. I've got burned 2 times already, so I took, I think, 2 losses on the NZD in the last couple of weeks and months. So usually how I try to structure my trading is I give myself 3 attempts on a specific trade idea. In this case, that trade idea would be to sell the NZD because it's overbought, not overbought, but I think mispriced. That's how I would pick GBP NZD. And if that fails, I would probably not try to do anything with the New Zealand dollar on the theme of the RBNZ being more hawkish or more dovish than expected. So that's my pick. But I wouldn't go in a trade right now. I would like to see one more confluence. So I would like to see or wait for one more reason to go in. Maybe with the pound, maybe with the NZD, maybe with the Middle East. I just want to get a bit more clarity on that. Or if it flips to bullish on the edge finder, that would work as well. So a bullish print on the edge finder on GBP NZD, that would be nice. Are you looking to take one? So take either.
I am. Okay. I'm not in a rush though. I just want to make sure that I know what I want to do when the time is right. Like ideally, Pound Kiwi, if I had that bullish score on edge finder, that would give me more confidence, just because it has the technical kind of support underneath it. But I don't have that, so I'm just trying to filter out here.
I would say it's this kind of a quiet period, not a lot of stuff happening. So for me, it is the case of trying to be patient and not taking suboptimal setups, I would say. So I'm only in silver, which is not a lot of risk. So took that one as with smaller risk as sort of a feeler position. We talked about it yesterday, and I thought about it. It seemed like a good idea to try. It's in drawdown at the moment, but yeah, still fit the plan, still happy to take it. So I'm not in a massive rush to add more size to my positions, or let's say take new ones. And as they say, 90% of profits come from 10% of trades. So most of the time, we have to just sit on our hands and do nothing, which is tough, especially when you're running a stream that's trading related, because usually if people like join for 30 days and you take no trades, it's kind of misses the whole point, but that's trading. So usually you'll have maybe 10, 20 super active days in the year, and that's about it. Rest of the days, if you can control yourself, that's great. But if you can't, you can get yourself in a lot of trouble and erase all of the gains that you made during the good period.
That's great advice. And Sluggy says right there in the chat, never feel obligated to trade. I'll add to that and say, not being in a position is a position. So look at the Nasdaq, Marco. It has been rating, I think it was ball out yesterday in the chat. I was reading it passively. But the ATR has been narrowing on Nasdaq specifically, meaning that, or you could imply that there is a big move ahead of us. It's showing a lot of relative weakness here compared to the others. Nasdaq, or the S&P, just taking the slow grind higher, and the Nasdaq is just taking the slow grind lower. What do you think? What do you think's happening here? Is there a catalyst on the horizon, you think? Do you think that if the war in the Middle East really does start to pop off, that the market will start to accept that and reprice all of its optimism that it was pricing in before?
Did we get any news on the Middle East stuff? I didn't really check Financial Juice today.
I haven't either, really. Let's see.
I did check the market moving, and market moving there was nothing. But I think in the yeah, here we got some chatter about the closing of the different sort of straight.
Al Mendeb, right? The secondary kind of
Yeah.
one.
Yeah.
Okay.
Yeah. But again, it's just words, and words don't matter much. It's all about the actions, I would say. So I think Trump is still flip-flopping between escalation, de-escalation. So that's completely like we can't use it at all. I would say that July Fed, so not next week, but I think in 2 weeks we get the July Fed meeting. That could be a catalyst. So essentially, we're looking for a catalyst. The markets are flat at the moment. They want to see more clarity. They want to see either a bullish or a bearish catalyst, something to sort of to break the price up or down. The price action is definitely coiling. So there's a triangle pattern right there on the Nasdaq, which lower highs, lower lows, or sorry, lower highs and higher lows tightening up. So there will be a break up or a breakdown eventually. Of course, for me, I'm not gonna do anything until we get a break. But I would say it's better to talk about what could be the potential next catalyst. I would say the Fed, probably. The Fed, of course, it could be an escalation in the Middle East. I think, could a de-escalation happen anymore? I think we have de-escalated as much as we can. So I think we can just get an escalation and earnings. So a lot of earnings are coming up, especially in July and I think beginning of August. It's earnings season for a lot of companies. So it's just as far as the stock market goes, that could be pretty important. And summertime trading volume usually goes down. That's just a reality, you know.
Yeah.
But what do you think? So what will be the, let's say, top 3 potential catalysts that would move the NAS or the S&P?
I would say that earnings have been helping, for example, the equity market actually stay afloat during all this. Like, I think one of the reasons is one, like the market is actually putting behind the war in the Middle East, especially like initially right here, right? All of this was basically that. But I think also on top of that is that you do have pretty good earnings, right? So I think it would be, if you were to take that away, then I think there's some repricing to be done. So I think maybe it is the catalyst, Marco. The earnings season is now you're starting to see missed expectations versus you've seen just stellar out of the park earnings, which could tumble this thing lower. That would be interesting to see. The Fed, I don't know. I'm curious because they're on this whole no forward guidance kind of boat. So I don't know how much we'll get out of them from that. But
I don't believe that. But
I think in the future we'll get more out of their independent speeches than their Fed meetings. I think Warsh is just gonna put that hat on of like, no forward guidance and be kind of cute with it. But then when it's time to talk outside or different Fed members, they're gonna actually give their thoughts and opinions. I think that's how we'll receive our forward guidance from here on out. But looking at the data itself, had you not had this war in the Middle East re-escalate again, you would see, I would imagine, softer dollar, bullish metals, equities continuing to rip higher, but that's just disrupting everything. So my hope and my idea is that from a humanitarian standpoint is that the Middle East stuff does go ahead and die down. That way you can actually start to trade with the data, and the data right now underlying is pointing at maybe some easing ahead, but that's just not allowing it to happen. Like yesterday we had the dollar index tumble lower here. Still hasn't, in my technical kind of markup, the way I'm looking at it here, hasn't quite broke it yet with force and continuation. But yields too, like you had a good kind of path for yields lower, and you're pretty much retracing most of it here today. So that's just the only thing that's up in the air. But I think that if the war in the Middle East still stays around, right, it still continues its trend of like, it's better, it's not better, it's better, whatever, right? I think the next catalyst that would really move the market and override the Middle East kind of blanket would be earnings misses.
Okay, that makes sense. So I would say Middle East first, of course. Second, earnings. Third, forward guidance from the members, the Fed members in the meetings. I like it.
Yeah,
I like it.
That's what I would say.
Yeah. For me, the more you trade, the more you learn. So I've started to notice that, especially in Forex, it's all about teams. So what teams are prevailing at the moment? And there's usually maybe 3-4 great teams in a specific year. So essentially right now, the two teams that I'm watching are on the US dollar. So for example, selling the US dollar, being bearish on the US dollar, and buying the yen. So essentially structuring trades around that. And excuse me, let me just go grab a glass of water and I'll be back.
Sure, no worries. Sluggy says BB knows. Yeah, he probably does know a thing or two. Metals, yeah, I can talk about metals real quick. As Marco leaves real quick. Metals, along with everything, like right now, everything is trading on one thing, and that is the Middle East, right? Like if you have a higher price of oil, that right there is going to trickle into dollar setups, gold setups, bond setups, whatever, right? So it's all one thing. So if you want to talk about metals or the dollar or whatever, you really just have to look at the price of oil. It's very simple. If oil is higher, you're likely seeing a stronger dollar, stronger bond yields, and weaker metals. And if oil is lower, you're seeing the opposite. It's very that simple. It's been that way, and it's kind of boring, but it's been that way since the war started.
Absolutely. And we have to mention that oil is elevated this week. It has gone up this week, so it's risk off. Mostly prevailing risk off. Yeah. But yeah, what I wanted to just finish on the thought, basically 3 to 4 teams per year, big ones, and then you trade around them. It doesn't mean like you get 4 trades per year, but it means if you're bearish on the dollar, you take 4, 5, 6 positions that are bearish on the dollar in the span of, let's say, a couple of weeks, couple of months. So for me, that means I was in GU, so I was buying GU. Now I'm in silver, long silver, which is against the US dollar. It's one of the confluences, and just structuring your trades around that in Forex.
GU was a monster yesterday, man.
Yep.
It finished at 1.1, I think. 1.1,
I don't know
1.12. It was they had like their recent guy step down, Starmer, and then they had someone new come in that was more, the market sees him as more fiscally responsible. So market loved that. So
politics, just political situation. And even the certainty just gives the market confidence. As far as I noticed, like Keir Starmer stepping down creates a bit of uncertainty, but the new guy stepping in creates a bit of certainty.
Sluggy says, yes, Alan, but I don't think I have edge trading the war. Sluggy, I think no one does. I think the only edge when trading in a war is in the very beginning, when you're getting the original repricing. That is it. And the longer that it stretches out, then the headlines get diluted. What people say gets diluted. It means nothing anymore. So the only kind of edge is in the beginning. Like I remember when this one started, the US-Iran war, like huge. Like I remember the first headline, you'll get like an 8% pop. The Discord chat was going crazy. We were all like, oh, this is it. Like, and then everything we were saying, it was happening. It was just moving up. I remember the US Venezuela situation. I was at an event in the evening and I got the message and boom, oil popped crazy. And the obvious clear moves, like the obvious of what's going to happen, is only in the beginning. And then after that, then you start to like think broader and be like, okay, what can this mean for this or for this or for this? And then it gets complicated. And then the more it drags out, it just gets diluted.
Yeah, and it's not just us.
Sluggy says the beginning was awesome. For sure. Like even the tariff stuff. The beginning for tariffs was awesome for me. I loved it. But then as it went on, then you have, more people coming into the conversation and stuff like that. That's how it is. I think no one can like has an edge over trading war, me personally, because things always change.
Yeah, and it's not just us. I'm reading blogs and newsletters from traders that have 30 years of experience. They say the same thing. Like, look, like the war is completely unpredictable. Trump is an unpredictable guy, and then you add Iran into the mix, and you get like uncertainty squared. So essentially, just stay away from that if you can.
And then you
Focus on
add
some things
BB
other,
into the mix, you know,
the big Yahoo. Or,
the big Yahoo, like everything was going well, right? And then all of a sudden he started striking, and Trump cursed him out over the phone and said, "What are you doing? Like, you know, we were on the path to peace."
yeah,
So yeah, it's when you have three powerful people in the mix, it's difficult. I would imagine. I
yeah.
couldn't imagine, actually. I couldn't imagine.
And like Trump was, when Trump was developing back in New York, he was dealing with the mob, and he got it done. He got it done. But now he can't seem to get it done. So it seems like the most impossible negotiations in the world, let's say. I mean, the Middle East was always impossible to solve. So yeah, I'm just afraid it's gonna be a forever war. But what is good for traders, it seems like the market is trying to get away from it, at least.
Yeah, definitely they are. And that's what I was seeing here with like the S&P. Like let's pick a random candle here. Candle, what is this candle? April 17th. Let's go to oil chart and we'll find April 17th. April 17th. Right here. Was it this one? Okay, oil was at $89 a barrel. Still elevated. But the market was saying we're going higher from here. So it's the market has been putting this behind us. It's just like they're just waiting for it to be confirmed that it's behind us. And then I'm just afraid here if it never truly does go behind us, and then you have to start pricing in markets at a oil price of $92 a barrel or $100 a barrel. That's where things get weird.
And what do you think about this theory? So the S&P, let's say the S&P has completely decided to ignore the Middle East, but it's all about the earnings now, as you mentioned. And essentially, we're in a period right now where there is very little earnings happening, especially in the big names. Like the big names seem to have passed. So what if the S&P and the Nas especially are just waiting for the next round of earnings before they bring it up or bring it down? As earnings are super important right now because we had stellar earnings so far, especially in things like Micron and similar tech stocks.
I think you just overvalue and like you're over dependent on earnings. Like if that's your only thing keeping you up and then it just misses, then now what? You know what I mean?
Yeah.
Versus like if you were to let's say the Iran stuff wasn't in the picture, you would have had a decent labor market, good growth, inflation cooling as of recent, but then you miss earnings. You're like, okay, cool, but if you look holistically, you still have a decent jobs market, good growth, and inflation is cooling down, so you can justify to keep pushing higher. Maybe it's not a straight line move up, but you drift higher. Versus now, it's like, all right, like if that's what you're over dependent on, and that fails you, then you have problems on your hands.
Yep. So we'll see the next sort of shift of earnings.
We'll see, man. Do we have anything tomorrow as far as major news goes? I don't think so.
I don't think so. I think the next big thing, okay, we have some central bank meetings next week. And next week, you will be seeing a lot more of Alan and me. I think our new schedule starts next week, right?
Does it? I think maybe.
I think it does. So we're going to try and start the stream earlier. We'll do 2 segments. So both of us, so essentially an individual segment by Alan and then by me, or by me first and then Alan, and then it's going to be the joint segment. So I think it's going to be pretty fun. But next week, central banks, not the Fed. And the week after that, we do have the Fed. So I think we get a bit more quiet markets until that Fed meeting, because I'm not seeing a big catalyst that's coming up. So I'm expecting a bit of continued chop, which means no trades, basically.
Yeah. I'm excited, man. I'm excited for the longer segments, especially we can help the guys over there that are maybe missing it just because of the time zone difference. So more offering there. So that's going to be fun. Yeah, I want to do something interesting as far as segments too. Like I wonder, like I want to help like make it like a really fun show. You know, it's already a great show, but you know how like there's different segments and stuff like that can keep it entertaining. I'm curious to see how we can accomplish that. But Marco, thank you for the conversation, man. I'm gonna pivot out here, and we'll talk tomorrow.
Thank you as well. We will see each other tomorrow. And just to finish off, what do you have running? You have the dollar Swiss. That's about it.
Dollar Swiss, sadly,
Okay, cool.
yeah, just hanging out there. Unfortunately,
yeah.
I want to go ahead and execute on pound, but again, as I looked at pound dollar, in fact, this mean run up here, I would expect some kind of a pullback. So if anything, if we do get that pullback in pound dollar, then maybe that can give me a better pullback on pound kiwi, and hopefully by then the score improves. But for now, yeah.
Cool.
I am very interested in gold though, Marco. I'll be honest with you. I think the put to call, yeah, I'm interested in it. I think the put to call ratio got worse actually, but I'm still very interested. So before I pivot out here, let me look at the crowd sentiment.
No worries.
Put to call ratio. It was very extreme yesterday in gold, and I think it cooled off. Yeah, it cooled off.
Okay. This was actually one of the reasons why I took my silver long, because the correlation is pretty high with gold and silver. Silver was kind of in between, but with gold being so high in bear sentiment, I thought it was a good correlation and a good confluence to be long on silver. Because if gold is going to move up, silver will move up as well. It's just about how much it will move up.
Yeah, and then the bearish options flow is still very bearish on gold as of yesterday. So if we get a switch up, I don't know. How do you take this, Marco? Do you take this as a contrarian signal or just following the flows?
Well, I haven't done a lot of work on it, so I can't really speak on it, but I know how I use the call and put walls. Essentially, I use the call and put walls as just support and resistance levels. But the flows, it can be tricky. You have to determine, is it retail or is it investors? Is it institutions? So who is it with the flows? But with the call and put wall, it's pretty easy to deduce that a big wall means a big resistance or support. So I'm still going to have to do more work on this net options volume flow. Yeah.
Okay, cool. The way I use it, just for the viewers out there, because this is a new feature and I love it, and I love the fact that we're bringing more options data into the picture. The way I kind of see this, or the way I would time this, Marco, is like, for example, this would be my less lagging COT data, just trying to gather like where the flow is from a net perspective. And then as far as like this right here, bearish or whatever, then I would go to the put to call ratio to time it and see if we're overextended or not. So right now gold is getting bearish net options flow, but the put to call ratio is, as of now, stable. You know what I mean? But if you had like super very bearish net options flow, and then you had also to the high put volume like swayed in one direction, then that would give me more conviction of kind of taking it from a contrarian stance.
But we can do mean reversion. So if you put it back to what you had with the flows, just quickly. So we can do mean reversion and say that look how deep the red bars went. So they should bounce sooner or later, bounce back to the middle, which means buying, right? So I know a lot of professionals actually use these sort of charts to determine where the extremes. So the extremes in positioning, for example, and then you look for the flip.
Segno says, how do you convert GLD to XAU USD? I think you just add a 0 behind it. So what is gold at right now? 3992. If you go to GLD, it's probably at 392. Oh no, it's different. Okay, I thought you just added 0 to it. I thought it was just priced in the hundreds.
Interesting.
Yeah, beats me, man. Wish I knew. All right, Marin, I'll leave you to it.
Yeah, talk to ChatGPT. So
I'm gonna tell Claude, man.
Claude. Yeah, okay, even better.
Claude knows. I'm gonna use a million tokens on that question.
Okay, thank you, Alan. Looking forward to tomorrow, and have a great day.
All right, man. Take it easy. Bye-bye.
You too. See you. Okay, so let's first start off with mentioning the sponsor of today's video, which is going to be Ola Prime. Okay, so Ola Prime, I think this needs to be updated, so it's 20% off now. So the code A1 Live, let me just put it on the screen. The code A1 Live gets you 20% off on any Ola Prime challenge. Now, if we talk a little bit about Ola Prime, you go to the Ola Prime Trustpilot. Okay. Essentially 4.5 out of 5, which is pretty good. 2.7K reviews, pretty good. And they don't have a consistency rule on some account types. So if you're a swing trader like me, you would know consistency rule. You would know about this and the problems that come with this rule. So Ola Prime doesn't have it on some account types. And with the code 20% off A1 Live, you get a great price as well. So if you compare Ola Prime to FTMO, you get a much cheaper price. Plus, you get a pretty good prop firm. So I know I do say stay away from new firms, and that is true. But if you can review the firm, if you can look at the reviews, of course, in the Trustpilot, and experience from other traders. I know a couple of traders in the A1 Discord who got payouts with Ola Prime. If you got that as evidence, then basically it is a good company to go with. So use the code. Link is in the description. And now let's talk about my watch list. Oof. So silver, this is a new position that I have. This was a signal in the A1 Discord. Currently in drawdown, so not looking the greatest, but I'm betting on 5.5 to hold. So 5.50 here, that's a big round number. I would say a big support level. So I would like to see that level hold. We will see what happens with that. Main bet behind this is, first, there's a good level of support here. The 5.5 level is a crucial level in my opinion. Second, I'm betting on dollar bearishness. I'm betting that inflation naturally goes down. I'm betting that the Fed becomes more dovish than people expect. I'm betting that we get no rate hikes this year and maybe even a cut next year in March. And the seasonality is pretty good. So if we go to the Edge Finder, and we go to the seasonality. Let's see. We go to the monthly. You will see for silver that July is one of the best months. December and July tend to be very, very good months for silver. So those are my 3 reasons. I know it's not a lot. It's not a massive reason to be long, but again, I'm stacking confluences one on top of each other and creating a trade idea with those confluences. So I thought the probabilities are here. It's worth taking a stab at it. That's what I'm doing. Let me check. So the new feature, which is under crowd sentiment, net options flow. Let's take a look at silver. So we did see gold. Let's see silver. Okay, so silver is pretty flat. Silver pretty flat there, which means I can't deduce much. I can't see much right there. Let's see gold. Because, of course, huge correlation between gold and silver. Okay, and if we go back, let's go back to months. Let's go back. Can we do, I don't know, 50 months? Let's see if it will populate. This is it. So this is what I'm talking about. We are now in the extreme bearishness, right? So when there's an extreme, usually it's highly likely that that the sentiment will go up. Okay, so that it will flip back to bullish. I like this. This is actually pretty bullish in my opinion. So what I need to do now is I need to survive this trade. So I need to survive this current price not hitting the stop loss. Let's see what happens. Sluggy says analysis was there, but this shitty escalation ruins the trade. That's trading. You will always have some sort of a breaking news event that you can't control, and it basically ruins your trade or hits the stop loss, and then the trade goes in your favor. There's always something. So if it's not the Middle East, it's going to be something else. That's just how trading works. If that didn't happen, we would probably have like 70 or 80% win rate, while the real win rate is usually below 50 because of these events that happen out of thin air, because of comments from Trump. But if there's no Trump, there's usually someone else. I do want to mention, if you want to get the Edge Finder, so you can get, I think it's still 40% off. So there was a summer sale running. I'm not sure if it's running anymore, but do take a look. So the code Marco gets you a discount. If the summer sale is still running, it's going to be 45% off. If it's just a regular sale, it'll be 25% off. So if you're interested in the Edge Finder, if you want to get the software, I use it on a daily basis. I use it to structure most of my positions. Go to the website, link is in the description. Go to the Edge Finder, type in the code, and see how much discount, what discount is active at the moment, what percentage. But totally worth it. So do check it out. Okay, I have reached the end of my segment. I do want to mention, just to sum things up, to kind of clean it up a bit, markets are a bit slow. Catalysts, there's not many. Middle East seems to be controlling the narrative at the moment. I'm waiting for the Fed. The next big thing, the next big catalyst, in my opinion, is going to be the Fed and the earnings if you're looking at stocks. Do be more patient. Do not force setups, because you don't want to lose all of the progress you made in the last couple of months. I know I definitely don't want to lose all of the gains. So thank you for watching. I'll see you tomorrow. And you have James coming on in 30 seconds, so do not go anywhere. That's it. Goodbye.
What if I told you you could get a copy of the Edge Finder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of Edge Finder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the Edge Finder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
There we go. God, unmuted, and I've got no screen. My apologies. I'm so unprepared today. There we go. You should be able to see that in a second. How's everyone doing? Hope everyone is well. Happy Thursday. Almost done with the week. It's almost the weekend. So yeah, Jeremy, good to see you, my friend. Yesterday, we were looking at CAD yen. I was saying I really like the look of this trade. We drew the fib from the low to the high, looking for the retracement back into the previous structure. Unfortunately, we've just continued to rally to the upside through today. So unfortunately, there's nothing I can do on CAD yen. It is one of the top readings on the Edge Finder here, very bullish with a score of 10, tied with pound dollar to the long side as well. So CAD yen is looking really, really good, but you know, it's already run off, unfortunately. However, I do have a pending order on pound dollar GBP USD. So, excuse me, my pending order is just below 1.346, and it's exactly the same setup. You know, bread and butter, rinse and repeat, fib from the low to the high, waiting for a pullback into the previous highs on the left, and then looking for a rejection and a continuation to the upside. So very simple. And again, as I just showed you, pound dollar is very bullish on the Edge Finder here with a score of 10, which is fantastic. 2288, hello to you as well. Sluggy, hello. Is it too late for Euro pound setup? We can take a look actually. GBP/USD pullback. Yes, that's exactly what I'm looking for. To see if we can get a little bit of a continuation to this downside on a pullback, and then yeah, we'll see. So Euro pound, let's see. Yes, so it's basically the same problem we had last time, Sluggy. I'm not sure if you remember, or anyone will remember, but a couple of weeks ago we were really confident on euro pound shorts, and I almost got in, missed my position by 1 pip, something crazy like that, and then it just rallied to the downside. Then it happened again, and it was just constantly missing entries by 1 or 2 pips every time, and it was really frustrating. And it seems to be not the same, but you know, it's a similar environment where we are rallying to the downside, but these pullbacks we're getting just aren't, they're just not substantial. They're not enough for me to do anything with. So in terms of the technical approach, there's nothing I can do here because we've got this really nice level of structure, which is part of my strategy. You know, we look for the breaks and then the retest. And then ideally, these retests are within a fib zone. However, in this case, the fib is now a bit too low, and we are seeing a continuation to the downside. So it's tricky because I really like the trade. I think the trend is obviously there. The fundamentals are there. It's got a score of -6. So everything's aligned. It's just the market just won't give me an entry. So what can we do? It's very frustrating. But yeah, I think it's valid. Absolutely. Oh, you do remember, and you remember as well, Jeremy. We've had some good times together on this stream. Yeah, I'm sure we've missed a lot of trades and had frustrating times. Fun stuff. Pound Australian. So I do actually have a position on Pound Australian, but it's very small. And it's just, where did I enter? I entered roughly around here, actually maybe slightly higher. So I'm probably around entry here with a stop loss there. I don't know why I don't have it on here. So I am in a position very similar to this. And actually I entered here. So it did pretty well. Initially, I entered on the momentum to the upside, looking for a break of this level. We did discuss this yesterday, and I said I wasn't really keen on it. But then I decided to sit back after stream and say, you know what? The trend is bullish. We pulled back to the fib. We've had the rejection. It's bullish on the edge finder. Everything is there. The only concern I've got is this daily time frame where we've got the double top that's clearly come into play, and this daily 200 moving average, which is looking a little bit detrimental. So I was willing to take the risk. So far, it's not done anything. It is a negative swap market, so I am losing money the longer I sit through this. So I'm probably going to close it at break even. I'm not willing to give it too much time. The fact that the daily hasn't broken, and we've seen so many rejections to the upside here, it does give me a little bit of the heebie-jeebies that we might actually end up just coming lower and maybe even correcting some of this left side that we've got on the daily time frame. But we'll see. It's not a huge deal regardless of what happens there. I should probably leave that. And that brings us back around to CAD yen that I've completely missed. So yeah, that's it from me today in terms of, you know, what I'm watching and currently in. But it didn't work out, so never mind. GDP also beat today. Yeah, looking at DXY bullishness if we have oil stays elevated. Yeah, we'll see. Oil is a little bit of a frustrating one. I was long around here, and then I got stopped out on a trailing stop here, and it seems to have a little bit of a resurgence. I'm still expecting oil to reach around 85 and just correct this gap or fill the gap. I think that's, I don't want to say guaranteed. Obviously, nothing's ever guaranteed, but that's my sort of base case right now, is that we come up for this gap fill. After that, I've got no idea, because then we're approaching this previous level of support. If you guys remember, this was becoming a little bit of a meme. You know, price would come down. It looks like, oh, oil's going to correct. We're going to finally get the downside on oil. And then we get the tweet, and it just, or a tweet, something happens, a headline, and then it just rallies back to the upside. So we're approaching this level again, where it could do kind of an inverse, where we get the escalations here, and then we get a headline of de-escalations, and actually, you know, we get some sort of break and retest. Wouldn't that be convenient? We'll see if that happens. But yeah, in terms of actually trading oil, I'm not interested. Like I said yesterday, I took an attempt, didn't work out, so I'm on the sidelines. Pound New Zealand looks better than Pound Australian. I would disagree, actually. I do quite like the New Zealand dollar at the moment. What's my take on the yen? I don't have one, to be honest. I think the yen, I think we're at very high risk of an intervention. But the problem is, when is that going to happen? You know, I could sit here for the next, you know, couple of weeks, couple of months saying, I think we're going to have an intervention. It looks like we're going to have an intervention. It feels like it. But then it could just never happen, because obviously we don't get the warnings. So I will, if we put the intervention narrative to the side and just shelf that and ignore it just for this this segment here, I would still say buying dollar yen, buying CAD yen, buying pound yen is all still very valid. You know, the fundamentals are there. It's still a fantastic carry trade. Bank of Japan's rates are still very low at 1%. So I wouldn't say there's a reason to sell unless you are trying to speculate on an intervention, which, as I've been reiterating over the past couple of days, it's just a 50-50 bet. There's no guarantee of that working out. So if you're into a 50-50 bet, sure. But for me, that's not really my style. So I suppose there's two ways we could approach dollar yen. Well, actually, two to three ways. Third way is, as I said, sort of betting on some downside 50-50, but I'm not going to go over that. So the two ways I'd be interested in is either a smaller pullback on the H4, maybe just down to this 200 moving average, like what we saw over here, looking to buy low with a very tight stop. And that's the key there. I'm not having a stop down here, for example. My stop would be right at the previous low. And that would just be protection against the potential intervention. Now, the other thing is, and this is a little bit more in my favor, or a little bit more suited to my liking, which would be an intervention trade, but not trading the downside. It's actually trading trading the downside, but buying into the downside, not selling the downside. So it'd be very similar to what we've seen previously, where we get the intervention, pull back towards the 200 moving average on the daily time frame, and then just basically buying and accumulating a low price, or low price relative to where price is right now. Expecting this market to continue to the upside for the foreseeable future. And again, you might be in a small loss, you might see a little bit of panic, but overall, I would expect it to continue higher, and then we can benefit from that carry trade dynamic and positive swaps. So yeah, we'll see. I don't think dollar yen or the yen itself in any way is really going to change the dynamic. I don't see any groundbreaking things where dollar yen is suddenly going to plummet down to 140, for example. I think the real downside risk for dollar yen is if the Fed starts cutting and the Bank of Japan starts hiking. We get that real clear central bank divergence, because that would really narrow that yield gap that we've got between the dollar and the yen. So we would see that, and obviously on the back of that, we then get the carry trade unwind. So that would be sort of the biggest catalyst we could get, but that just doesn't seem to be happening right now. It could happen in the future, but as things stand right now, it's one of those things that might happen, might not happen. It will close, always does. Yes, market caps generally do close, and I'm saying that from a sort of G7, G10 FX perspective. In stocks and natural gas and cocoa and the different markets I don't trade. I can't speak for those, but yeah, in very liquid FX markets, I'd say like 99% of the time we see the gaps get filled. I don't want to say 100% because I've got no data to say that, but every time I've seen them, they get filled. It could, again, as I always say, it could take a couple of hours, it could take a couple of weeks, but generally we do see them get filled, yes. Perhaps if we get stronger jobs data on US, gold shorts could work out. Yeah, so gold is in a very interesting point where I wouldn't really want to do anything. I think if you've got some bankroll, I think we spoke about this yesterday, but being a buyer at around 4,000 and lower, so you could have incremental positions at 4,000, 3,900, 3,800, and so on and so on. This isn't financial advice, by the way. You would need a lot of money to do this, because otherwise you would end up in significant losses. But accumulating some gold, almost like an investment, at these low prices. Again, when I'm saying low, I mean low relative to where price has been, up here towards sort of 5,000 and upwards. So that's one idea. But then if we take a more short-term, swing traders sort of point of view, it's tricky because we do have this cross on the daily, which some people might not care about. For me, it's a big deal because it's a change of trend. That's how I identify trends, but also because it's gold. If we zoom out, gold hasn't had one of these, quote unquote, death crosses in a long time. It had, I think it might have had one here. I'm not 100% sure. But either way, it's a very telling sign about the market sentiment and trend. So that's a bit concerning. The H4 is bearish, but of course we've got this daily, weekly level of support that's coming into play, which has been holding up. So there is an idea of actually buyers just defending this level, sellers pushing it back down, and we actually just end up a bit range bound around here, kind of like what Bitcoin's been doing. That could be one idea. Now, I'm not sure if gold's changed since I last checked, but gold was doing okay. Yeah, it's dropped slightly. I think gold was 3 or 4. Actually can't see. But yeah, gold was a little bit more bullish yesterday than it is today. So a little bit of the upside's taken away from it. But overall, I think gold's in a tricky position. I think we really need to see something decisive happen. Either we need to see very clear dollar strength. We get maybe an escalation in the Middle East. We get positive data for the US. Now we could expect gold to go lower. That's very simple and plain. Or we see the opposite, where we get weaker US data. We see some sort of de-escalation in the Middle East, and then gold really doesn't have that much pressure to the downside left. So it's as far as I'm concerned, it's really more of a case of just having to wait and see with gold. I suppose on another technical note, we could wait just to see the reaction off this level. If you are a purely technical trader, maybe just buying some bounces would be relatively profitable, if you're scalping or day trading. But then also, if we end up breaking lower, having some sort of retest and rejection to the downside, that could also be a very nice trade, basically on a trend following momentum breakout style of approach. That's not really how I trade, but I wouldn't mind maybe taking an attempt to the short side if we do get that break and retest. I feel like I'm really yapping today. I've only got 15 minutes left. What else have we got here? In this very specific environment of higher oil prices, yes, Slug, yeah, I would agree. Well, no, it's not that I would. I do agree with you that gold is still pressured. Although I'm not sure what the dollar's doing today. The dollar technically actually looks decent. I can't do anything with the dollar right now because the data just isn't fantastic. We were looking yesterday and it's lost 60% of its score. So maybe 2 to 3 weeks ago, the dollar had a 100% reading. Everything was, well, not everything, but we had a massive bullish score for the dollar. There was nothing else we had to do. Buy dollar, very simple and straightforward. That changed very, very quickly. So I keep saying gold. The dollar is now at 40%. So it's actually just slightly in this bearish category. So I can't really warrant being a buyer. But from a technical side, it looks really attractive. So actually, I suppose we'd have to kind of force it. So if we take the previous low to the high, this is a really nice fib retracement. It's also a really nice retracement into the previous highs on the left. So technically speaking, break, retest, continue higher is kind of what I'd expect. But again, the fundamentals don't warrant that idea. So I'm pulled in both directions, long and short on the dollar right now. So yeah, not much I can do. But as a trader, as an edge finder user, I follow the data and the fundamentals. So I am looking to go short on the dollar by going long on pound dollar on the fib retest, as we spoke about earlier. My take on DAX, interesting. Okay, we can take a look at DAX. I think we can enter CAD yen on the break and retest of the daily. Let's take a quick look at that. Then we'll move on to the DAX and Aussie yen. We can have a look at that one as well. So our Sedingo. I assume you mean either one of these two daily levels here, one of these two sort of resistances. I see the idea, but for me personally, I don't like that. And the only reason I don't like it is not because of the pattern. I love a break and retest. That's my bread and butter. It's my jam. I love it to bits. But it's just the amount that we've already come to the upside. We've got the RSI that is continuously pushing overbought. We've got the moving averages here that are flipped bullish, yes, but we're very deviated from our 200 moving average right now. So these small little signals are telling me that this market is a little bit overbought. I don't want to buy it right now. I'd rather just wait for some sort of, quote unquote discount or whatever you guys want to call it, pullback, retracement, whatever, and then look to be a buyer from that point. So yeah, longs, absolutely. But I think the timing wise, you just need to be a little bit careful. Okay, so Aussie yen, and then we'll do DAX. Aussie yen, let's see. I think this kind of just relates to back to what I was saying about dollar yen and CAD yen. Yen pairs across the board really are doing very well. Actually, I think dollar yen is probably the worst one, but things like CAD yen, pound yen, euro yen, Aussie yen, all doing fantastic. So as far as I'm concerned from this point, there is an argument, actually. We've already had the break, and we did break above and then came back down, had the retest. Some people might not consider that. I personally don't really, but that's kind of all I've got for you. So I would just wait for the next pullback and look to go long. We've got the bullish trend that's established here. Similar thing with the RSI, is a little bit overbought here. So I am kind of getting a bit cautious that we could see some downside temporarily. So yeah, yeah, I really like this fib level actually, about around the 61.8 roughly. I mean, it's not perfect, but we do have, you know, previous lows over here, previous highs, moving averages, pull back into this zone, catch up, and then yeah, continue. So Aussie yen, yes, I think longs are clear, but again, it's more a case of just waiting for now. Okay, DAX. By the way, you should consider yourself lucky that I've remembered to go over these markets. Most of the time, I'll completely forget what you asked me to look at. Take on US oil. We did do oil earlier, so I'll go over that if I've got some time, but I am running out. I've got about 10 minutes left. Realistically speaking, I think we'll see some boring range-bound accumulation periods before we create new all-time highs. Yes, I completely agree with that, Sluggy. I would expect the same thing. I don't think gold is going to have a V reversal. I don't think it's a case of, you know, we've had all the downside and it's just going to bounce and continue to new all-time highs. I think that's very unrealistic. I would expect, yeah, that sort of range-bound pattern to happen whilst we've got some sort of indecision. You know, very likely we'll get one of the things happen at a time. I don't think we're going to get good US data and de-escalations at the same time. I think we'll get one and then the other, and that will lead to a little bit of range-bound price action in the meantime until there is a new catalyst for gold to go higher. Manisha, hello. Okay, DAX. So with DAX, I don't think I've got anything in particular, but we can definitely have a look. You've been in since 1.8, 111. Oh, in Aussie yen. Okay. Yeah, so you're looking to buy after pullback, and you've already been in since 111.8. Very nice. Sounds good. Well done. I mean, you've caught a nice rally there. So DAX has got a score of 1. So there is nothing here. Jobs market's neutral, inflation bearish, economic growth is very bullish. We've got no technical, no institutional, and no crowd. So there is no score here. Although actually this might be a little bit of a visual bug. I'm not 100% sure, but I'm just going to take it at face value. I don't have time to dig deep into all the data points. Excuse me. But just from that, I don't see anything. So fundamentals are neutral. The trend here on the H4 is seriously lacking. So we've got really nothing going on. We are technically in an uptrend with the moving averages, but the fact that right now they're kind of side by side, we've had just range bound price action over the past couple of days. There is no direction for me to trade into that. So on the H4, there's nothing. The daily does look quite good. You know, we do have a pretty decently established trend here on the daily time frame. So what we could maybe do. And the reason, by the way, the reason I'm looking automatically to go long is because this is my default. So with things like the S&P, Nasdaq, DAX, by, again, default, I look to go long because that's the general drift of these markets. So if I was to follow that idea, I think buying around here actually isn't too bad of an idea. Again, on a technical side, fundamentally it's not there, so I'm not going to do it. But yeah, just technically, I think it's okay. We've got a relatively okay, previous level of structure, support over here, a bit of a resistance here, support again, bullish trend here. We're currently in a fib zone. So yeah, technically it looks all right. But again, it's not good enough for me. We are also seeing a bit of a rotation in the market. So we're seeing oil pretty much the dominant factor on cross-asset perspective. We're seeing the indices markets really flat, slightly negative, and we're seeing metals underperform a little bit as well. So on that side of things, I'm not really very interested. Pound Swiss. Okay, yes, we can do Pound Swiss. Let me just quickly check the time slot here, make sure I've got it right. 10:45, so that's not too far away. So it's Tiger coming to take over. Cool, we've got about 6 minutes, give or take. So Pound Swiss, let's see what we can find. I don't know about this one. I'll tell you why in a second. I just want to see what the Edge Finder has got for Pound Swiss. So it does have a bullish score of 6, which is interesting because I actually wouldn't mind using this as a short opportunity. Now, it's a little bit frustrating because being a buyer of Pound Swiss is very profitable. The swaps on this market are great for buyers and very expensive for sellers. We've got the daily trend that's bullish and we've got the Edge Finder that's bullish. So everything is actually telling me to be a buyer. which does make a lot of sense. I'm not necessarily trying to go against that, but I do want to argue the bear case as well, which is the higher time frames. So something we discuss quite commonly, especially regarding pound Swiss when we cover this market, is the higher time frames. So the monthly time frame is extremely bearish. So being a buyer, yes, can absolutely work short term, but you also need to, yes, keep in mind the higher time frame trends. So what we see on this monthly time frames, every time we come up to this 50 moving average, we actually see rejections. Maybe a little bit of a false breakout, but overall the pattern is there. So maybe some sort of long position into, let's say, around this sort of 50 monthly moving average could be an idea. Weekly time frame, again, is actually very, very bearish. And again, something we notice when we come up towards the 200 moving average, we consistently reject this sort of level, or that zone, whatever you want to call it, that moving average. RSI on the weekly is very overbought. So maybe something, yeah, kind of fill this candle here. So let me just do, let me just see what we can find. So to be honest, and again, I want to clarify, I'm not going to take this position, but I'm just trying to argue both cases and give you both perspectives, because pound Swiss is quite a unique market. I do like to cover both long and short ideas. So I think this actually makes a little bit of sense. Maybe not right now, but something, if we start seeing rejections on lower timeframes like the H4, the H1, whatever it may be, some sort of short position could go there. And that, of course, will be following the higher timeframe trends. But don't let me confuse you. Short term, H4 and daily, very bullish. Edge Finder is bullish. All the fundamentals are there. It's just the high timeframes, again, are a little bit of a warning sign for me on pound Swiss. Pound Swiss, I'm looking to take, looking for a long to take out that high. Fair enough. I think that makes sense. As I said, I think longs are, you know, where you would want to sort of go to on a short-term swing trader bias. But of course, you know, it's always good to pay attention to higher timeframes because they are more dominant and they are a little bit more meaningful. In fact, significantly more meaningful. Oh yeah, I've made already enough money with Nikkei this year. Now just squeezing it a bit more. Yeah, actually, I've not checked the Nikkei today. I don't think there's really anything going on. Yeah, it's really not good. It's kind of, the US market's doing the same. Yeah, we're still in this range on the S&P. What's the Nasdaq doing? Same thing. Yeah, really nothing. It's what I was saying earlier. The rotation that we're seeing is oil is catching the majority of the bids. Indices across the board, global indices really aren't doing that much. And metals are underperforming as well. 5% on Nikkei. Fantastic, Sluggy. Really good job. Well done. Okay, right. So we've got a couple of minutes left. Let's just do another quick review of what we've got in the Edge Finder before I head off. Make sure we've not missed anything critical. Dollar CAD actually could be quite interesting. Let's see. We have been paying attention to dollar CAD, but I wasn't a massive fan of it earlier. Yeah, it's tricky because the daily kind of makes me want to be a buyer, to be honest with you. And the reason is because I really like the level here. This previous resistance could potentially be the next support. We've established a bullish trend on the daily. The RSI here is oversold. So technicals are screaming to go long, but the fundamentals are also screaming to go short. So this is the problem. I'm, again, getting pulled in both directions. I want to go long, but I also want to go short. So unfortunately, I can't do anything here. However, H4 wise, there is maybe an idea of being a short seller on the H4, but again, we are really approaching this level that I don't want to be involved with really. So we could take the fib from the high to the low. There might be an idea here of looking for a pullback into this previous low that we've got, and then a continuation looking to take profits around, let's say 1.39 roughly. I think that's kind of all I could find that would align with the Edge Finder right now. Again, purely because the daily just does look really bullish to me. I don't really want to go overly deep, but yeah, that's that. Wait for the weekly candle to close on UCAD. What's going on? Oh, you are right. Yeah, weekly candle is very aggressive. But it, again, actually does kind of, it makes me want to go long again. Weekly time frame, very bullish. This level looks even more attractive. So we'll see. But again, I feel like today I've gone really off the track. I feel like normally we have a very solid plan of the way that my segments go. You know, we check the Edge Finder, we look at the technicals. I feel like I've gone off that today. I've actually looked at a little bit of the opposite ideas. That's not what I'm trying to do. It's just the way that the markets are. and the way my analysis goes. I normally like to look at monthly, weekly, daily timeframes and then execute on the H4. But in this case, today specifically, you know, pound Swiss, for example, on higher timeframes is really bearish, but lower timeframes bullish. And then we've got opposite fundamentals. So it's just the way the cookie crumbles sometimes. So I do apologize if anyone is getting confused or a bit frustrated. I know it's not great, but I do, you know, I am trying my best to try and try and make sense here. So moving forwards, what else do we have? Nikkei, Sluggy, you'll like this one, or I'm sure you've already seen it actually, but the Nikkei is getting a bearish reading of -4, which is interesting. I wonder, have the Edge Finder team changed the criteria? I swear 4 used to be neutral, unless I've got some psychosis. But yeah, we are seeing Nikkei slightly bearish here. Euro New Zealand slightly bearish, but again, I'm going to stick with my rule. I'm not interested really in anything that's got 4. 5 maybe, 6 is kind of definite. Also, my YouTube channel has just been dropped in the chat. I would really appreciate it if you could drop me a subscribe. I think like 5 subscribers away from hitting 4,700 subscribers. I'm trying to get to 5,000 by the end of the year. So if you could, I would really appreciate it. Thank you very much for that PSA. Anyway, pound yen still very bullish. The yen pairs we've kind of covered in general, but I've just realized I'm yapping way too much and I've just slightly gone over my time slot. So we have got Tiger coming to take over the show. Guys, don't go anywhere. Thank you for being here. Stay safe. Don't get margin called, and I'll see you all tomorrow. Enjoy the rest of your days. Yeah, see you later.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
What's going on, everybody? Happy Thursday. Hope you're doing wonderful out there. Hope you're staying safe. Hope you're figuring out ways to navigate this market. Between all of us collectively, showing our thoughts, our inputs on levels and psychology behind, you know, kind of how everything interacts, the data, the geopolitics, the sentiment, okay, all that. There's a lot. It's a big puzzle, but we'll get there. Just one little step at a time. 1% better each day, guys. That's all it really takes. So anyway, as always, if you guys would, just let me know if you have any specific tickers that you're looking at. I did write down a couple of notes I wanted to go through real quick. So today is the deadline for the Ola Prime drawing, guys. So I did some calculations on the time. So the deadline, if you guys do want to take advantage and get some entries towards those 2 free tickets, 2 free air flights, 2 free hotels, that is 2200 UTC or Greenwich time. So that translates to 6 p.m. Eastern Standard Time, 6 p.m. New York City time. So you guys still have up until that period of time to take advantage of that. If you're still looking to get you an account, take advantage of Nick's 35% off code there, A1 Live. Obviously, the QR code is there as well. But I did want to chime in one last time on that since we still have about 9 hours left, okay, or 8 hours left. So you guys still have time. If you were thinking about it, definitely go check it out. Even if you got one entry on a 5,000 account, guys, especially if you're on the hook or been kind of thinking about it, pretty cheap when you get the 5K, the 10K. I mean, they're pretty cheap accounts. They really are. So some of the best prices around. Obviously, you got the rules transparency on the website. You can go look at the challenge rules, and you can look at the Ola Prime account rules, which means funded rules. So it shows you, it splits that into 2 so that you're not having to guess, okay, I've passed the challenge. Now what are the actual rules or vice versa? So wanted to lead off with that for you guys and let you know that's still going for about another 8-9 hours. And guys, I don't know if you paid attention, but we actually in Texas just recently had a new stock exchange open. So it's kind of in direct competition with the Nasdaq, New York Stock Exchange, all that. but I think it's going to complement things. So that was just something else I wrote down here. How it kind of competes, really kind of listings focus. Companies can obviously kind of go back and forth between the New York Stock Exchanges as well as the new Texas Exchange, which is kind of in a suburb, or it's in the downtown part of Dallas, really kind of covering the whole southeast corridor of the U.S., if you will. So 1 in 10 companies listed on the exchanges are in that southeast corridor. So it's really kind of designed to kind of streamline things. It's all electronic, fully modern, low latency, all kinds of stuff like that. But at some point, it's probably going to start pressuring the incumbents on things like fees and rules and services. So, just like any other product or service, when you introduce more competition, it makes everything maybe a little bit cheaper in the long run, but overall better product. So wanted to touch on that. They're kind of in a temporary housing now until they get their brand new tower built, where they're actually going to have it in downtown Dallas there. But yeah, it's going to add some choices, liquidity options to the markets. And then what else did I put on that? Rolled out in July. It rolled out just the other day, I think, just a few days ago. Enhanced liquidity, improved price discovery, and then some other indirect benefits as well, especially more regionally. So definitely wanted to kind of throw that out there. That is something that's kind of been a behind-the-scenes headline of late. But I went to the website yesterday. And it's pretty neat setup. So wanted to bring that to your attention. And then really the last thing before we hop onto the charts was a question I want to pose to you guys. So we already know that the dollar has been kind of struggling lately on the data as far as beating and missing expectations. We take a look over here at the U.S. headline. This has to do with intervention. So I'm curious to get you guys' thoughts, because in the last 2.5 weeks, we've seen 6 bearish boxes jump onto our list. Okay, it really kind of started with the manufacturing PMI, where we had our first miss that broke our 100% beat rate streak. And then we also, that same day, had the bearish ADP number. The next day, we had the bearish non-farm payroll. And then 4 days after that, we had the services sector miss expectations. And then obviously the last 2 days, 2 days ago, we had the missed CPI reading, or the cooler CPI. I don't want to say missed, because we obviously like it here as far as buying our goods and services, but cooler CPI on Tuesday, and then cooler PPI the day after. What the producers are, the cost for the producers to make our products and such. So 6 bearish boxes. I think 1 or 2 of those went neutral, including today's retail sales. It was a bearish box this morning, or a bullish box rather, when we woke up this morning here in the States. Obviously did go back to neutral. So that's just a little bit less strength for the dollar, which took it from 45% to 40%. So I've told you guys that for me, 40% or lower, I want to actively, potentially start looking to go try to short that asset. So the dollar is right there with the Aussie dollar at 40%. Meanwhile, the other 6 are showing some bullish strength. So when it comes to the dollar, again, 40%. And then when we look at the yen, it's got 1 bearish box. Okay, we had a miss manufacturing PMI number about the same time we had ours here in the States. But since then, you've had just nothing but bullish readings. Okay, so the yen has relative strength from a fundamental standpoint relative to the dollar. So I guess really my question is, we've already seen several interventions take place over the last, couple months or so, only for them to get retraced back if we're looking at the dollar yen. So they've just gotten retraced either that same day or within the next couple of days or so. And now we're still at the all-time levels. Well, not all-time, but I should say 1986 price points. So do you guys think if they intervene again in light of this data change we've had in the last 2.5 weeks, do you think it'll actually stick this time? Do you think we'll actually cap dollar yen? Or do you think we're going to continue back up into deeper 1986 territory? So I'm just curious about that. Because, again, we can see all the retracements over here from these interventions that have taken place. But this is back before the data was weaker on the dollar. So with the dollar showing economic weakness, I'm just curious to see what you guys think. Do you think if they do another round of yen intervention, it'll actually stick? Let me know what you guys think on that. Let's have a look at the Dixie. I'm selling euro from the top. Dixie's Midnight Riders. That's the band. When I was born in 1982, they had a song called Come On Eileen. And that was the #1 song out when I was born. Dexy Midnight Riders, guys. Good song. Go listen to it if you're younger than 30, 35. Okay. Good stuff. 80s music. Nothing beat the 80s music as far as I'm concerned. That was my favorite period. The classics. Okay. So anyway, Dixie. Let's go look at the Dixie. As far as the Dixie itself, we've obviously had quite the push up. The retracements have gotten a little bit bigger with each retracement that we have had. We flirted with that daily supply overhead. Still a ways away from kind of that 4-hour confluence, but we've had quite the push up. Now, we've had a lot of data misses in this pullback period because, again, that July 1st was that first bearish reading we had. So that'd be this green candle here. Okay. And then some retracements from all the data. So again, 100% all the way down to 40%. It's lost 60% of its fundamental strength if we're just isolating some of the most important high impact red folder economic calendar events. Retracements on the data, but also we've had kind of a competing force with the blockade going back on, the U.S. putting the blockade back on. Obviously, bombs and missiles getting lobbed back and forth between the U.S. and Iran over to Kuwait, over to Bahrain, Saudi Arabia, all those places. So it's just back to a big giant mess. Nick kind of touched on it briefly this morning when he was on his segment. So, we've got some competing forces because dollar traditionally is a safe haven currency. So it typically gets a lot of inflows with uncertain times. But it's already had quite the push up. If we're just kind of going all the way back to early part of April and even further back in January. So basically this whole year it's been up. So that's just kind of the context I thought I would just kind of throw out there before looking at any of these dollar pairs. We just got a couple competing forces. And then not to mention, if we get another round of intervention from the Bank of Japan, will that have an effect? Because dollar yen is one of the bigger pairs out there. So that's just kind of my thoughts from the Dixie itself. I mean, we didn't quite touch that daily supply back here. We got close. In fact, you could probably make an argument if we go back here, because it did technically get mitigated once back in May of last year. So I'm sure if you probably dig a little deeper into this daily, you might even find a 4-hour or 2-hour supply. Perhaps it bounced off of, which we won't worry about that. But yeah, I just think I don't know. I feel like it could just possibly go sideways for a while just because of that. The question is what's going to win out, the bearish fundamental data or the safe haven inflows potentially from the continuation of the end of the ceasefire. Okay. The end of this memorandum of understanding that wasn't really a memorandum of understanding. So Iran's being stubborn. The U.S. is being stubborn. I don't see it. I just don't feel like it would. I don't know. I don't see it really going anywhere for now. I think we still have some questions to be answered to see if we can get to another round of peace talks. In that time, see what the data kind of gives us. But right now, as it stands, as far as I'm concerned, it's bearish dollar. But with that caveat. So that's my thoughts. It's kind of a half answer. It's kind of it could go up, it could go down situation. But we just need a little more. We need a little more help from one of those avenues, because when the dollar data was strong, it was continuing to go up along with those inflows from being a safe haven currency. So, but yeah, everything's kind of shifted, literally starting with that green candle right there where the data started to go soft. So I'm not complaining about the CPI and the PPI data at all, but it's the other data that's kind of, a little bit of question for here in the States. But that's just my thoughts on it, on the Dixie's Midnight Riders and the Dixie. You're selling the euro from the top. So let's go to euro dollar since you brought that up. So euro dollar, pound dollar, Aussie dollar, Kiwi dollar, these are all showing up on our bearish list or our bullish list now. Just to kind of, start from the top setups. Pound dollar's at the top, Aussie dollar, Kiwi dollar, euro dollar, and I do believe that was it. Yeah. So that's the ones where the dollar is the quote currency. So they're all showing bullish. What a change of direction. Because remember, just 2.5 weeks ago, before all that data started going bearish, everything was bullish for the dollar. So all those pairs were giving us bearish readings. But the script has totally flipped. And now we're looking at them from a bullish standpoint. But remember, we had downtrends established on all those pairs. So if we start with the Aussie dollar, since that's just going alphabetical here, go back to my daily over here on the right. You can see we're still within that series of downtrend, the lower lows, lower highs. Now, kind of the prelude is how I use the moving averages, the 8 and the 21 EMA. So on Aussie dollar, just as an example, the 8 is still technically below the 21. So yes, the alligator's mouth is starting to close towards the top, but I personally on Aussie dollar, along with Euro dollar and Kiwi dollar, which I'll show you shortly, I want to see some structural breaks to the upside. I also want to see that 8 close above the 21. Just kind of a secondary confirmation, mechanical confirmation of this trend. But there's no way you can look at this and say we are yet to be in an uptrend. It's a deeper pullback, but it hasn't really broken any major structures. So you asked about Euro dollar. It's really a very similar picture. Lower lows, lower highs. Is this just nothing more than a retracement to form a lower high? We don't know yet. But if I actively want to start buying Euro dollar, then I need to at least start to see some breaks of some of these structures, some of these supply zones. This is a 4-hour zone, I do believe, or maybe, you know what, that one's even smaller. This is my daily. So at most, the ultra conservative answer would be break this structure all the way up here and then start looking for some retracements. But that's a long ways away. What if we look at pound dollar? Pound dollar is the only one that I see that's actually had that happen, to where we've kind of broken some of these lower highs. So just to recap, Aussie dollar, no swing high broken. Euro dollar, no swing high broken. Kiwi dollar is close. It's formed a double top, but it hasn't broken and closed above it. And then you still have to remember on Kiwi dollar that we had at one time a supply zone, a daily supply zone right here, where price broke structure to the downsides, showing it had strength. Some gap going on there as well. And then when on the retracement, we tagged into the supply, and that's where we caught those unfilled orders and pushed price down. So rather than waiting on a break and close above the swing high, which is technically what that is, I want to see a break and close above the supply zone right here, because there are still likely remnants of unfilled order potential in that zone. So I just think that for me, technically speaking, Aussie dollar, Euro dollar, Kiwi dollar, they still have a little bit of technical analysis work to be done before I have any interest in buying them. Pound dollar, on the other hand, has already done that. It's already broken one swing lower low, or one lower high, 2 lower highs, 3 lower highs, however you want to look at this. Even if you just look at this as, you know, the lower high and then you lower low, lower high. It's the point is it's broken a couple of them on yesterday's candle that closed pretty close to the top. So where the dollar is the quote currency on these 4 pairs, pound dollar is the only one I personally have interest in right now. And it just so happens to be the most bullish currency pair we have. So that's going to be, just by those reasons alone, my favorite one to look at. I got my 8 EMA pointing up above the 21, unlike the other 3. Alligator's mouth opening to the upside after we had our little cross or death cross, whatever you guys call it, over here. And now that's it. So if I just go back to a single chart view for you guys, simplify it a little bit. Where's my demand zone? Well, we already had one here that worked out pretty well. Now, I went through this the other day. I felt like it was too close to this congestion over here, so I actually ignored it, but kept going. Okay. Missed out on that one. That would have been a pretty one. But at this point, what it's done is created a new demand zone on a 2-hour time frame. So now, for me personally, I'm looking at this 2-hour hammer candle with a wick underneath it. That's really where we had a, you know, on this 2-hour time frame, we had 1, 2, 3 green candles, continued to break these structures over here and close pretty sharply to the top. You also had the volume. We didn't get a yellow candle. I tell you guys all the time, I want to see one of these yellow candles on my leg out. That is my favorite. We don't have that. But what we do have is inclining volume, inclining VSA. Talking about these candles right through here. Okay. These candles are growing higher as those leg outs are climbing higher. So that's a positive convergence of volume versus price. So in other words, my goodness, I'm going blank here. Well, yeah, the volume is growing with the price. That's what I'm trying to say. Okay, Wyckoff. That's one of the Wyckoff. That's one of the Wyckoff methods. Action result, effort result. That's what I'm trying to say. Effort is matching result. Couldn't think of my words there. So that's why I'm keeping an eye personally on this 134 psychological level, which is another +1. Now, that's not a reason for me to buy just because it hits a psychological number. All that is an additional odds enhancer. But the reason I would want to potentially buy is because of the unfilled order potential, and then the momentum move up, strong momentum move with inclining volume. That again, that positive convergence. Positive convergence. So that's my personal favorite play among these top 4. So hope that makes sense. But yeah, there's no denying that was a very strong move out. This is the kind of momentum I want to see exiting any of my zones, whether it's supply or demand. The only -1 I can possibly think of is the fact that if we go all the way out to a daily, that zone is technically within, and it's kind of squirrely, but technically within a little bit of equilibrium, a little bit of fair market value area. So you had a rally base rally, right? That's basically inside of that basing structure, that big black hole. That's really the only -1, if you will, I can think of is that. But other than that, everything else looks great. The very strong score we have on the top setups, +10, I think I could probably look past that because of that reason. So that's kind of my thoughts on that. Gold, says Dark Age Metals. Let's go have a look at gold for you. How can you check EuroCAD? Look for buy. Yeah, we can look at EuroCAD as well. Let's go do gold. I know that's everybody's favorite. Still neutral. Okay, if we're just isolating the gold over here on my neutral items, first of all, oil is a +2. I think it came down a little bit. Gold is down to a +1. Silver, I do believe, is a +1 as well. I think that's where I saw it this morning. Silver, so yeah, +1. So as far as the gold and silver, they are +1s. They're not getting so much love apparently from the technicals, neither helping nor hurting from the sentiment. We obviously tomorrow do get a brand new COT report that should be coming out and updated. The most recent result on gold was a -1%. So again, that's kind of between that +2 to -2 range I personally look for. So that's pretty well neutral, not really hurting nor helping. So we're really not getting any help there either. The eco is obviously where gold and silver are starting to see a little bit of love because of the negative data we've had from the dollar. Those 6 bearish boxes I just showed you guys earlier. So neutral, just need a little more help. But let's go look at the technicals for you. And as far as the technicals, we obviously had a drop yesterday after the close. And we kind of bounced back into this mitigated 4-hour zone of demand down here. This one that was created back on July, the 1st of July, basically where the data started going sour for the U.S. Because July 1st, remember, was that first negative data set with the ADP and the manufacturing PMI, I think it was. From there, that's where we got a big spike up. But what did we spike into? Spiked into that overhead supply confluence. The unfilled orders. At the time, the dollar was still showing pretty decent strength. Not the greatest. It was already starting to wane. But point is, it wasn't bearish like it is now. So the psychology behind it is we still had strong dollar, even though we really didn't. It started to go the other way. But we got into this zone structure, caught some ask orders, and pushed us all the way back down to this demand. This 4-hour demand, which we just barely wicked into by a few pipettes. And then we started our next push up. Well, we based, and in the basing, formed a brand new, I think 30-minute supply. Retraced back up, bounced into supply, and now we're back down, going to the downside. So I say all that to say, I need to start seeing some breaks of some of these structures, the upside. That's why I drew this green projection line the other day. I want to see a break and close above the remaining unfilled order potential that might be in the top part of this, the last bit of 4-hour plus the rest of the daily supply. If we get a break and close above this point right here, then I'll be interested in looking for a retracement. but not a moment too soon, because so far that's still overall, if we go back to the daily over here, still downtrend. And the EMA picture is going against the grain as well. 8 is still pointing towards the bottom along with the 21. So I need the moving average structure to move around, but that comes secondarily to me. If the breaks the structure and close gets there first, I'm good with that. If the moving average structure comes around about the same time, that's a confirmation to the highs and lows relationship. So nothing I can do on gold. Silver is going to be a very similar picture. But that's really the next step, is seeing if we can at least break and close somewhere around the 42.27, 42.28 level before the next move, I think, can be made. Does that make sense? Because while we talk about fundamentals probably being the most important analysis group and sentiment probably being maybe the second most important, kind of the confirmation of the why to get into a trade. And we always say, and the technicals are, and this is probably different for everybody, but I look at technicals as the least important, the third most important. I mean, it's important, but just because it's not as important to me as fundamentals and sentiment doesn't mean I'm going to ignore it. I could have a great fundamental and sentiment reason to buy this, which I don't, but if I did, I still got to wait for the technicals to move around. And this is why you hear Nick saying a lot, hey, for a while he mentioned on Bitcoin, he mentioned on gold a few times, got to see some breaks of structures to the upside. Because last thing we want to do is try to catch a falling knife, right? So hope that makes sense on gold and silver. Just got to see some more technical. It's got some work to do, my friend, as far as I'm concerned. GU ascending monthly. Yeah. Well, yeah, that's the thing, guys. When in doubt, zoom out. When in doubt, zoom out. You say descending or ascending? Ascending. Oh, yeah. Yeah, I mean, obviously, if you go all the way back to September 2022 monthly, this thing's just been giving us higher highs and higher lows. But we've been on about a year sideways trend if you look at the monthly. But what's it still in context of? Still in context of the uptrend. Had a really strong 5-month move here that ended in June of last year. So basically the start of 2025. And ever since, we've just basically been going sideways. You could make the case this is one big, ugly, ginormous black hole equilibrium fair market value area. But that's kind of a little higher time frame than I really care to look at when it comes to trading as a daily 4-hour. Right? We want to keep it all in context. The higher the time frame, the higher probability something will work out in our favor. But that's a little too high for me as a daily 4-hour trader. But yeah, you're exactly right. It's just been one ugly sideways daily or monthly, weekly trend, I should say. But yeah, on the daily, getting a little more granular. We've got an up move. We've got the EMAs working out in our favor, and we've got the structural breaks. I like it. The only thing that could possibly affect this is the fact that we are starting to bust into a little bit of overhead resistance. Now, am I afraid of this particular zone right here? Because this could potentially give us some havoc. But if I'm looking at this on a daily and I'm trying to draw up a daily supply zone, I would have to use the last green candle up before the move down. Okay, this by definition would be my overhead supply. But do I have any inefficiencies in that price point right there? If I look at the bottom of that base, that candle, and I ignore the leg out, which is pretty weak, I might add, and I go to this second candle, is that wick touching? Is it overlapping the candle to the left? It is. So there's no daily, in my opinion, there's no daily inefficiency there. And let me color the candles correctly. Right? This wick right here is what makes me less worried about this being a supply zone that could possibly turn things around or catch my long trade and take away all my unrealized gains. So I'm not worried about it on a daily at all. What about a 4-hour? Let's go to a single chart for you guys. Okay, this is that same daily zone I just drew up, and again, we are bouncing into it. Do I have a strong 4-hour zone here? Do I have a zone with a 4-hour zone with a gap? Well, this is all pretty well efficient. All these candles are overlapping each other, so I don't know that I'm really worried about any of this. If I go a little higher up, the first gap I see close to the top would probably be these candles right in here. specifically that red candle. That red candle does, by definition, give me a gap. So that, ladies and gents, would be the first inefficiency that I personally would be worried about. But that's still a ways away. Talking about this gap right here, right? It's all about the inefficiencies of the market. That's typically where the unfilled order potential lies, just on the other side. Again, we're going to the bottom of that candle. We're skipping this leg out. We're going to the top of the candle after. This to me is the first inefficiency closest to the origin of the strong down move. Now, yes, there is another one down here. Okay, we have a gap clearly from here to here. But the banks like to tackle. The banks want the best price possible, just like we do, right? So I would think that would probably be the one to worry about the most. But again, we're just a long ways away from it. So as far as getting into that long trade, that's a lot of profit potential. If I just pull that zone forward, I'll go ahead and leave this zone here. That's a lot of profit potential from that 2-hour zone I just drew up. We're talking, and I know my time's up. We're talking over 200 pips. So that's quite the price. That's quite the profit target, in my opinion, guys. Because if I get a strong bounce from this demand zone and I see bullish engulfing candle, I see hammer candle with a wick underneath, I see the VSA, the volume spread analysis activity picking up. Well, or confirmation entry, or where we change a character on this down move. Well, then is this area here, if there's a supply zone in here, is it really that strong if it can't even break through an opposing zone? I wouldn't be worried about it as much. That's where I'd be okay with taking a high probability trade. So 134 it is for me, guys. As always, not financial advice. That's just what I'm looking at. And my goodness, the time has drawn nigh, ladies and gents. Stay safe out there. Let me get out of here. And yeah, just remember, if you guys are still looking for that account, you do still have a few hours left. So go take advantage of that. olaprime.com. Next code. We'll see you tomorrow. Take care.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.